All right, everybody, welcome. We've got another live session here tonight. This one coming live from Fort Lauderdale, Florida. I'm on a tour, if you will, because that sounds cooler than saying I'm traveling and staying at my Airbnb properties, looking at them and making sure they get ready. So instead, I'm telling myself that I am on a countrywide national tour looking at real estate. I was in Tennessee in the Smoky Mountains. And if you guys were following me on Instagram, I was posting a bunch of bear videos because those things are everywhere. Kind of crazy how many bears are there. And I just got into Florida 2 days ago. So I've been out here looking at investment properties and following up with the ones I've already got, meeting with the contractor, going over the plans, getting some ideas put together, doing all the stuff that if you love real estate is kind of fun. And if you hate real estate, well, you should just send your money to me and I'll invest it for you and get you a solid return. Been doing a lot of that too. So if that's what you're interested in, just to start things off, head over to investwithdavidgreen.com. Fill out the little survey there, or if you have my email and you're a accredited investor, you can send that to me as well. Actually, let's throw up the email that if you guys want to just purely give money and get a return, I believe I'm paying anywhere between 8 and 10% right now, and you get your interest every single month. So it's not like you got to wait till the end of the year before you get it all. Head over to info@davidgreen24.com. We'll be throwing that up for you on YouTube. And so it looks like Melroy, the realtor on Instagram Live, knows the Fort Lauderdale area. So I'm here. If you guys follow the Fresh and Fit podcast, I think I'm going to be doing that while I'm in town. So I connected with those guys and they wanted me to come in and talk real estate on Monday. So if you guys are following their channel, it's definitely not the same stuff you're going to hear on Bigger Pockets. It's a little bit differently, but it's interesting to say the least. You guys can check me out on the Fresh and Fit podcast. Monday, I believe we're going to be doing their show. They're in Miami, so I'm going to have to drive down there. All right, Kyle, what's the best way that we can explain to people how they can text in with their questions?
So yeah, the best way, if people have a question, I'm going to throw up a phone number here, and she just text message your question to that phone number. I'll make sure it gets put in front of you, David, and then we will essentially send you a link to basically come in here on the studio live on camera with David. So let me go ahead and throw that phone number up for you so you can take a look at it, and then would love to have you come in and chat with David.
Raynell said, looking good, Dave. We were just talking earlier on Instagram about how I do very well with compliments from men in the real estate space. So can only be grateful. Thank you for that. This is it's always the guys that give me the most compliments. I suppose you got to take what you can get, right? Beggars can't be choosers. So thank you for that, Raynell. All right, so we'll clarify this. You guys should see a text number scrolling on the screen. So text that with your question, what you want to talk about. My best friend, my producer, he's kind of like the holy trinity of friends with me, Brandon, Kyle Reinke, where he has my back all the time. He's also the chief operating officer of the David Green team and runs the David Green Mastermind, which is sort of sponsoring these events here. So he will be screening you and picking the people that are going to bring the best questions. We will bring you in to ask it live, and we'll get your questions answered. You can ask me questions. I can kind of dive into your scenario rather than just trying to guess what people are looking for. And should be a good time on this Friday evening. And I'm actually on the East Coast now. So this is usually where Kyle's at. It's usually 5:00 at my time. And all these East Coast people have to stay up super late because it's the end of the day before I can get to stuff like this. The middle of the day is usually meetings and work-related obligations for the different companies that I have. And so now I get to be on the other end of that. It's like, oh, the sun's going down out here. It's kind of late, but we're still going to have a really good time. So I see some of you are already asking questions through YouTube, which is exactly what we want. Kyle, are you able to see those questions and you'll be able to reach out to any of those people, or is there any way you can contact them?
Unfortunately, for example, some of these questions, I don't have a way to contact them. So if you want to come on live with David, you got to send that text message to the number below, and then I can invite you in, give you the link to come and hang out with us.
Yeah. Okay, so here's a great one. I like Ian McDuffie's question. Ian says, hey, David, what do you think about the Dallas-Fort Worth market? We have such a low supply of inventory. I don't think the market is going to decrease too much with rising rates. What are your thoughts? Ian, that is exactly what you should text into the number, and then Kyle will send you the link that you can click on, and it will bring you into our studio. Then we can bring you onto the show. So please don't be shy. That's a great question for us to get into. As we're waiting for you guys to follow directions and text that phone number with your question, we are going to have to find something to talk about. So Amanda Rodriguez says Ripon, California, and that's all. Very mysterious comment there. I'm guessing that Amanda is from Ripon. If you guys don't know where Ripon is, it's a very tiny city right in between Modesto and Manteca, California, very close to where I grew up. Kyle too. So Kyle's grandma lived in Ripon, and one of the first houses I think that I sold, like in my maybe second year, was his grandma's house out there. And he and I used to go play basketball out there, and it's like one of the cities that we like. So it's funny that Amanda is from there. She might actually know some of our folks.
Good times in Ripon. That's actually where I bought my first house too.
Yeah, that's right. Got your first dog out there, right? Or did you have Piper and Turlock?
We had him in Turlock, yeah.
That was some fun times in that house, though. We did P90X out there, and that was like the hardest thing ever, man. Like, I remember being so sore that I thought like I might have broke something in my body. Like, this was a terrible idea. Like, the level of soreness after doing P90X was kind of unreal. Your whole body. You remember that, Kyle? Just like your entire body just being screaming at you.
Oh yeah, those were the days for sure. All right, let's see here.
All right, if you're on Instagram, you need to head over to YouTube. I'm going to shut down Instagram Live. I see a lot of you guys asking your questions there. Unfortunately, nobody else can see them. So head over to youtube.com/David Green Real Estate and join the party. Thank you guys. I'll be signing off. Kyle, we have any luck yet?
Yep, we got a few people got some really good questions coming in. So I'm sending out some links, and we should be having them come on any minute here.
How was your day today, Kyle?
It was good. Went out, actually showed a few homes this morning to some clients, got a couple offers out, and then I actually have some houses on the market right now that are listed that I'm trying to get under contract.
So tell us about your listings. Where are they? What do you like about them?
So I actually have a listing in San Jose, really solid property for anybody that knows the San Jose area. This is in a really good location. It's been only on the market for about 10 days, which right now in this market is a pretty good thing. Listed just over $1 million, and it's a solid home. It's not 100% clean in terms of the updates. It was sort of a older generation that lived there, but very clean in the sense that it's been well maintained. So it's just cosmetically dated, but a pretty cool property. So I'm really excited about that one.
All right. And is there a place they can see the listings for the David Green team by chance? We don't have those like accumulated anywhere, do we?
I think if you go to thedavidgreenteam.com, you should see the majority of our listings on the front page.
All right. We'll have you throw that up there while I start with David Miller, our first live caller. David, what's going on, my man?
Hey, David. How are you? Great name. Good pick. Thanks for having me on. Love all the stuff you guys put out. So real quick question for you guys. I'm in the Cleveland, Ohio market for the most part, kind of in the west side suburbs. And when I started investing there, the rent to price ratio was pretty fantastic. It was very easy to find something that cash flowed well. Now I'm in a position where home prices have kind of caught up to and surpassed rents. I'm under contract right now for it's like kind of like a construction loan BRRRR type property where I'm cash flow neutral, should be when it's done. But I'm a little concerned, one, that if interest rates drop in the future, we may see depression in home prices. And I was just curious what you're thinking about that kind of situation in a market that's traditionally been more cash flow than appreciation. But I'm starting to get to the point where we can't find cash flow anymore.
Yeah. What's your opinion on why the market has shifted so that cash flow is so hard to find?
Well, I think the area was kind of lagging behind in home values. So if you look at like average income to home value ratio, the area was very, very low. So everything was very affordable. And I think at this point, things are starting to kind of catch up. You would be able to buy a house that would rent for $1,100 for 80 grand in a B-class neighborhood. And now those houses are selling for 150, 160, 170. But the rent has only gone up 14, 1500. So we're kind of surpassing that, 1% rule area, and things don't cash flow so well.
But why do you think we're surpassing that 1% rule?
Well, I'm not really sure. I think what's happened though is that the salaries and the wages can support that, and so demand, I guess, has increased and supply has decreased, right?
So you got it. It's that simple. And the reason I'm bringing this up is if you can understand how to think in terms of supply and demand, real estate becomes much less mysterious and much more boring and predictable, which isn't what sells memberships to things, but it's how you build wealth, because we got to take the fear out of investing in real estate. So what you mentioned was, you actually said it perfectly. Demand has stayed the same or grown, but supply has been constrained. Like, they're not building as many properties. So when you find a market that looks that way, it's a pretty strong indication prices are not going to go down. Now, if you had told me supply was rapidly increasing and demand wasn't able to keep up with it, or maybe demand was staying the same but supply was increasing, I would expect prices to go down. Now, the other part of that is, when I look at a market, why is supply going up or down or staying the same? What is supply doing, and why? Are they building? Why are they not building? Can they build? You see certain markets like Seattle and Austin that have exploded in the last 8 years or so. The tech boom happens, which drives wages high and makes people want to move there. But the geographical barriers of the area stop them from being able to build more homes. So supply can't go up. So you understand the demand, high wages and jobs are pulling people into that area, and you understand the supply. It's pretty easy to see what's going to happen with a market like that. I believe you were talking about Cleveland, Ohio. Is that right?
Where you said the suburbs, yeah.
So where do you think demand is coming from for those properties?
So there's been a lot of household formation and inflow of millennial age people to the downtown Cleveland area. So my guess is that as households are being formed, there's areas of East Cleveland and other areas that just aren't nice, and no one seems to be moving in to fix them up. Is that people are, one, moving out of the downtown into the suburb areas, which is where I'm investing because of COVID and wanting more space and family formation. It also seems like there's a ton of outside investor money right now pouring into Cleveland. So that might be part of the demand. I know it's talked about a lot on the Bigger Pockets forums about it being a great cash flow market.
That's it, man. So I'm trying to think of a custom analogy for you, since you showed up as our first caller here. That's still somewhat appropriate. Cash flow plays a very specific role in the world of real estate investing. And then markets that cash flow easier are an even more specific niche. So a market like Cleveland that has a lot of 1% real properties is going to sort of function as training wheels for real estate investors. You're not going to fall off the bike with training wheels, but you're also not going to go as fast. They're going to slow you down. So it's very, very popular for people getting into the business, because you sort of learn the fundamentals of how real estate works, but you're not going to get really rich investing in markets like that. In fact, it almost serves as a launching point or training wheels on a bike. This is how you learn how to ride. And once you know, you got to take them off and you move into a different market. There's a lot of people right now that are getting into the entry level real estate stuff. And that's another principle you guys should all understand about real estate investing, is that if you look at supply and demand, like imagine the level of buyers in a market. It sort of functions like a pyramid. Okay. At the lowest price points, you have the most buyers. Then as the price points go up, it sort of tails off and tails off and tails off until you get to the peak, which would be like the luxury space. There's not nearly as many buyers that are there. That rule applies for an individual market. It also applies for real estate as a whole. And Cleveland is something that falls into that base. You've got wealthy people that have a lot of money that just want to get a couple 1-2 cash flow properties to kind of offset their portfolio. Every once in a while, I'll do that. Like I'm out buying some, I don't know if risky is the right word, but for lack of a better phrase, we'll go with riskier properties right now. They're more expensive. They have a higher upside, but they have a higher risk factor too. So luxury short-term rentals. In doing that, I call this like portfolio architecture, how you want to structure your whole portfolio. If I get a couple of those and I'm like, man, I'm just a little nervous about a recession happening, people not traveling, something going wrong with that property, it takes a while to get off the ground and get going, I may sprinkle in a couple really consistent training wheel type properties to offset the risk. Like, man, this thing's never going to be super exciting, but it's going to produce cash flow very consistently that can offset some of the risk of the bigger ones. It's sort of like I'm building my own pyramid. I want it heaviest at the base. So if I'm getting properties up at the top, in order to offset that risk, I need to move a little bit more of my asset allocation back to the bottom, widen out the base. Now I can swing for the fences up here. And if I miss for a while, it's okay. So Cleveland would be a very easy market to go find myself a cash flowing property. Okay. Multifamily, small multifamily, 2 to 4 units serves that exact same purpose. It's not going to have wild appreciation. It's very hard to burr. It's hard to add value. It's hard to do forced equity through small multifamily, but boy, those training wheels are solid. You know what that's like. It's several units. You can have a vacancy. It doesn't crush you. Your cash flow is going to be more solid. The rent's going to go up on all four. You can still get the best financing. They function as that training wheel. So let's get back to your original question now that you kind of see some background into the situation. Cleveland has become very popular with real estate investors starting off their journey. It's one of those markets that everyone's like, I'm finding cash flow. And the word gets around, cash flow. And everybody gets so excited and like run to the cash flow. I need to come up with a good example of what it's like. And I'm not against cash flow. I often get this a lot. People are like, David says cash flow doesn't matter. I've never, ever said that. Okay. That's actually one of my pet peeves is when someone makes a comment in a direction and then it's grabbed and they pin it all the way to the very end as if it's like you love cash flow or you're against cash flow. And that's not how life works. It's a spectrum and cash flow is on one end of it and usually appreciation's on the other end of it. I'm not against cash flow. I don't value it as much as other people do because having invested in real estate for a while, I've seen that the equity that you have control over, you have a lot more control over adding value to a property than you do over the rents going up that you don't control. I've also seen that a property that you put, $10,000 down on that goes up by 50 grand or something, you 5x your money would maybe take 40 years before you could make that much money in cash flow. Okay. So I'm not against it. It plays a role. It's not the whole thing. So you're going to see in Cleveland, are you telling me that you also believe supply is somewhat constrained? Like they're just not building that much there?
My guess is that they're not building because the cost to build is higher than the cost of the properties there, but I don't know that for sure. I know that there's some multifamily and things of that nature going in, but I haven't heard too much about single family construction in my area.
You rarely ever see single family construction in small multifamily or at low price points happening in mass. Most of when you look at these houses that are like 1% rule, 2 to 4 units, or even single family homes in a 1% market, these cash flow heavy, it's hard to miss, right? You look at these homes that you can buy for 150 grand, they're going to rent for $1,300, $1,400, $1,500 a month. It's somewhat low risk and that you're not going to lose the property. I just thought I'm going too far down a rabbit hole. I do that all the time. And then I forget where I was saying. They don't build them because they don't make a lot of money. Okay. They're great for us as investor. They're not great for a builder. If their cost of their labor is the same in this, if they're building $800,000 house versus a $200,000 house, the materials are roughly the same, right? It's a location that tends to make a house worth more. So you don't build $200,000 houses in nice locations. You build them in the worst locations. And so no one wants to build because they don't make money doing that. And the people that build those homes were people that did it 50 years ago. And at the time they were building it, they were doing it for $30,000. Now it's worth $150 and they think they're rich. We're looking at this stuff like, oh, it's only $150. Let me get in. Well, that wasn't what it was when somebody bought it. So you're probably going to find that asset class, that low price point, cash flow heavy thing is going to continue to thin out at anywhere across the country that isn't incredibly risky. The stereotypical Detroits, okay, you may still find some opportunity there, or rural areas where there's not a ton of demand. You're going to see some opportunity there, but you're going to see like the tide continue to just drop as far as available inventories in these cash flow heavy markets. Also, in a recession, people move away from the higher price stuff and they all feel safer buying the lower price stuff. The interest rate hike does not hit you as hard on a $150,000 home as it does on an $800,000 home.
Yeah.
All of those pressures are pushing the people that were like, if you look at like a mountainside and people like me that are kind of buying at the higher price points, it's pushing all the other campers lower and lower and lower to the base of that mountain. Okay. And that's where they're all going to run because they're going to feel safer. And the idea would be like the lower you get, the less the fall is going to be. Okay. But the analogy I would use is that when the floodwaters come, they eat up the people at the bottom first, right? So there's a lot of false sense of security that buying a $150,000 house is going to be really safe for you. When there is a nasty recession, those are the ones that get decimated. If you guys think about the markets in 2010, they got absolutely crushed. In my area, California, it was like Stockton, Antioch, areas that were like D neighborhood type things that got hammered. And then the really nice stuff, the A-class neighborhoods, the B+, slightly affected, not really that bad. So when I think a recession is coming, I move my asset allocation into nicer properties, and then I'm going to get less cash flow. I just have to be okay with that for the period of time where I'm in danger. So the good news for Cleveland is you're probably not going to lose value because of all the other people that are pushing into it. The bad news is you're going to have a harder and harder time finding those opportunities, like you're saying. And when, like you mentioned, when enough buyers go there, they can now charge more for the same house. It's just supply and demand. There's not enough supply. There's now more demand as more buyers are coming there. They're going to charge more for the house. That's going to make it harder to cash flow. You're going to get into the issue of, well, my freaking tried and true formula going after these duplexes out here in Cleveland is like they're not on Zillow at the same price as they were. I can't find them as easy. So you either sort of make a conscious decision to extend the timeline of when you're going to get the returns you want, because you're going to have to wait maybe 5 or 6 years to get the cash flow that you used to get in day one, or you move into another market and you look for an angle that other people are missing. What's your thoughts with those two options?
Yeah, I mean, one of the reasons I was in that market was when I was just starting out. I had a off-market deal through someone that my dad knew, and so it kind of worked out. I found a really good team out there. Was able to get several off-market deals that have, appreciated a lot, even though it's not an appreciation market through kind of forced appreciation. I also have a couple houses in where I live in the Maryland market, which are much more, they're $400,000, $500,000, $600,000 type houses. I guess you kind of pushed on this already. I'm wondering if I have enough defense. I know you use this analogy, offense and defense analogy. Is I was trying to build a cash flow base. Because when I have a house that has a $3,000 mortgage vacant, if I don't have, I can't float that too well on my salary, right? So I was trying to move into a cash flow market, build some defense, have some solid properties with a good team so that I can go into the more expensive markets or look at something like short-term rental. So it kind of sounds like the way you would lean is right now when you're not able to find the cash flow as easily, we have potential recession fears. It might be a good time to start looking in other areas where, I won't see cash flow, but maybe I'll have a bit more stability and appreciation upside.
Yeah, but that only works as long as you make the payment. Like that's the one flaw in the entire system. There was an old episode of Seinfeld. Do you ever watch that show?
Yeah.
Okay, so you remember the one where Jerry's apartment got broken into and he got the really fancy door with all like 900 locks on it, right?
Yeah.
And then Kramer is like staying at his house and he leaves, but he doesn't close the door. And it's
right.
like he has this really funny meltdown where he's like, this entire system is flawless and it can't be beaten, and it's marketed as having 900 ways that no one can get through this impeccable door system. The only flaw is, and he closes the door, it must be closed. Like it's that type of scenario where the only way you lose money in real estate is two things have to happen. You cannot sell the asset and you can't make the payment, right? Everybody worries about the crash, but if you can make the payment or you can sell the asset, you never go into foreclosure, right? Real estate is really just about time. How long can you own that thing and just let appreciation do its thing, both from cash flow perspective and rents going up and from the value of the asset. If you are in a position where you're like, I don't know if I could swing a $3,000 payment, then I would then say, let's put our attention towards how do you make more money at work? How do you save more money? You don't seem like the kind of guy, honestly, just from your personality, that's bad with money. You seem very careful, very deliberate, a high C on the disc profile. I don't know if you've looked into the David Green Mastermind.
Yeah. I'm an engineer, so I'm pretty meticulous. Yeah.
Not a coincidence that I could read that about you, David. So I would say we would probably want to put, if you were in the mastermind, more effort into how you can make more money. Getting you to think outside. The engineers often have this I don't want to say it's a problem. It's how your brains are wired. You don't make mistakes. That's literally why you exist. So people don't die, or so that a program doesn't fall apart. Like you look for flaws and you try to anticipate problems. And when you learn how an ecosystem works, you operate incredibly efficient within that ecosystem. But you don't take your eyes off of the ecosystem to see what might have been right next to you. Okay. So if you love an engineer, help them see something that isn't in their tunnel vision where they're just crushing. They're like a sniper. My friend Andrew Cushman, I'm a high C too. I'm very analytical. He's like super duper analytical. And I'm always telling him like, dude, you never, ever miss. You're 100%. If you get someone in your scope, when you take that shot, you never miss on the deal. But it's the 12-year-olds playing Call of Duty that are just running around spraying and praying to win. It's never the sniper, right? Like there's an element of wealth building where it's about taking action, making mistakes, and building into your world how you can make a mistake and not actually lose your asset. So all that is to say, let's look at ways where you could make more money outside of just the job you have. Could you get a raise? Could you work for a different firm? Could you do some like side work? Is there people who need, what type of an engineer are you?
I'm a civil engineer, so we do like a lot of water quality stuff and construction stuff. I actually just got a promotion. I'm the director of engineering now, so making a bit more money. And we just started a business as well. We do like bicycle touring and hiking and backpacking stuff. So I'm looking at those things, but I didn't want to just put the real estate investing on pause. I mean, the best thing I ever did was buy 2 properties at the beginning of the pandemic when no one wanted to buy anything. And I got them, off market with tenants that weren't paying and kind of flipped through it. So I'm still trying to push. I just, I'm an engineer, right? I don't want to do it in a way where I'm putting everything on red and spinning the wheel. I like to be a bit more careful.
And you probably think losing capital is unacceptable. So if you have 1 month where you lose rent, you're like, F that can't happen, right? I used to be just like that. You got to break out of that. All right. I've shifted the way that I look at money in many ways. And I think it's part of the reason why I've gotten more of it is I don't look at it the same way other people do. And if you guys want, we could talk about that more on this episode, just the mindset behind when you look at money differently. You're kind of like Neo in the Matrix, where it's like, there is no spoon, right? Once you see that, it'll, and this isn't a magic woo-woo type thing, but I still work. I still own businesses. Like I was saying earlier, I usually don't get done with work until the end of the day. I make much more money from business than I do from real estate. But when I stop working, at some point, that spigot will turn off. The real estate spigot will keep going. The reason I work to make money is so I can go buy more real estate without that little engineer brain of mine that says that's not okay. You can't lose money, right? If I have enough in reserves and I've got enough cash flow coming in, I won't have that fear of what if something goes wrong? What if I lose money? I'm okay to be losing money in deals. I don't want to say like I lose money permanently. I mean, things happen in a house that I didn't expect. Real estate is part art and part science. And sometimes you get the art part correct and the science part, something pops off that goes wrong you didn't expect. And sometimes you get the science part perfect and it never really takes off. That can be happening in Cleveland. You can have your numbers perfect and then just they never really grow to the point it was worth your time. So try to understand that the reason you're working, the reason you're saving money is to put enough in reserves and buy more property, that the properties themselves, like you said, the best thing you ever did was buy those 2 properties. Okay. So the job you're working, the money you're saving, the work you're doing is for the purpose of buying more real estate, right? The real estate isn't necessarily going to just provide steady, consistent cash flow itself all the time. And the last thing I'll tell you is you should just house hack every year. Every year, buy another house, put 5% down. Buy either a small multifamily or a house with a floor plan that you can easily turn into more than 1 unit and live in one of them. And doesn't mean you have to have strangers. Doesn't mean you have to have people living in your house, right? You create separate units. And then when you move out of it, that becomes a rental property that you put 5% down on in the best neighborhoods with a better interest rate. Like that's what I love about it is house hacking lets me get into neighborhoods that normally would never cash flow.
Yeah, I did that once and then I got married. So it kind of killed that train. But that's the property that I've used. I cash out refinance. I use that to fund other stuff. So that was kind of my springboard. I think it's a great, if I did it all over again when I was younger, I would have done that a few more times before I kind of settled down. But
see if you can work out some kind of compromise where if she lets you house hack a house every year, you'll take her on a vacation somewhere that she really wants to go or something like that. Because you're going to look back 10 years later. And if you buy a house every year in Cleveland versus you buy a house every year in the best neighborhood, and was it Maryland you said that you're in? Yeah. If you buy a bunch of $200,000 houses versus $600,000 houses, those $600,000 houses will appreciate at a greater rate, and you will be getting more per house over a 10-year period of time. You can run the math on that. That's an astronomical difference.
Yep, definitely.
All right. Thank you, David. Appreciate you.
Awesome. Thank you.
All right, Kyle, who do we have next?
I'm in the private chat there, David, but I thought Mickey had a great question. Let me see if Mickey's still here, though. Yeah, Mickey's still here. Mickey, do you want to come on and ask your question with David?
All right. Hello.
Hey there. What's going on, Mickey?
Hello, David. Nice to be here with you guys. Thank you for the opportunity.
Yeah, let's see if I can get your last name.
Uh,
Jovanovic?
yep, Jovanovic. Yeah, that's pretty
Jovanovic.
close.
That sounds way better than how I said it. I don't know what I was thinking. Jovanova. Jovanovic looks a lot more. I watch enough basketball, you'd think that I'd know. Did you know that there's a basketball player that used to play for the Kings named Bogdan Bogdanovic?
Yeah, I know. That's a Serbian guy. But yeah, my last name is a Serbian last name because my dad is from there, but I'm Macedonian. So
okay. Well, what's your question? What you got?
I got a question. How you do a market analysis for a area? I mean, if you're trying to invest out of state, how do you do step-by-step market analysis in some state, whatever you're interested in investing?
Mickey, are you also an engineer?
Come again?
Are you also an engineer?
No, I'm not.
What do you do for work?
I'm a truck driver, and I have 2 rental properties in Illinois.
Okay. But you like numbers, you like spreadsheets, you like predictability, right?
Yes.
Okay. That's going to be what draws you to real estate investing. Is also going to be what stops you from progressing in it. It's going to be a blessing and a curse. So what you're probably looking for is for me to say, well, I go to this website and I get this data and I use these statistics and I verify it in this place. But what you're really looking for is a level of confidence or security. That's what you're hoping for here, is you're hoping that you can avoid making a mistake. Is that fair?
Exactly, yeah.
Okay. This is probably going to surprise some people. I don't think I've ever gone to look at data and then applied it to where I was buying. I almost always go find the area I want to buy, and then the data supports that I'm looking in the right space. Okay. Mm-hmm. If you did look at the data and said like, well, where should I move? You'd be looking for where are humans moving to, like population. And for the last, I'd say 5 years or so, the Southeast has definitely been where everyone's moving. If you took the US and you just tilted it down and to the right, everyone's sliding into the South. So there's a lot of people moving there. I'd also look for where jobs with not just jobs, but higher wages. That's a big part of it. And then I would look for, if possible, where supply was constrained. So I like buying in an area where they can't build a ton. I wouldn't want to go buy in an area like Kansas where there's just land everywhere and they can build a ton of homes. So I'm probably not as scientific as you would think. I look and I see like, where is it trending? Where do I think people are going to continue moving? So maybe 3 years ago, I started saying I would buy in areas with no or low state income taxes, warm weather, and conservative politics. Why do you think that I guessed that that's where people should start buying?
No, I have no idea, to be honest.
It's because that's where people with money are moving to. Okay. So Californians and New Yorkers, this isn't a political opinion about what's better. It's just the reality is that if you're a liberal minded person, you like living in San Francisco and you like living in Los Angeles, you like living in New York. If you're conservative minded, you probably don't. So the liberal people are not going to be leaving the area, right? That was happening more sort of into Austin, into Seattle, into San Francisco, because tech workers tend to be more liberal minded. So they're going into those areas, bringing their high wages, the values went up. Well, now we're sort of seeing like a backlash where conservative minded people are saying, I'm tired of living in these mismanaged, like COVID kind of changed a lot of stuff. You saw the difference between how Florida managed their COVID
versus
how California managed theirs, right? If you are liberal, you probably liked the way that happened. So you're going to stay put. If you're conservative, you probably did it. You're going to want to move to a more conservative area. So Californians aren't going to go live anywhere cold. I can tell you that. I'm one of them. Okay. We don't do well in cold weather.
Yeah.
I'm never going to North Dakota. So I'm going to go somewhere warm. I'm going to go somewhere with conservative politics. If I'm leaving California, if I'm leaving New York, those are the people leaving. And then I don't like high taxes. And if I'm good at money, I can pick where I'm going to go. So the 3 states that I looked at and I said, well, Tennessee, Texas, Florida. That's where I was telling everyone that they should be buying. Like literally, if they just did that one thing right, they would make money. And those areas have exploded. So I'm kind of giving you how I look at where I would go buy. And then if I needed it, I would go research those areas and see, does it show population growth? Does it see new businesses getting permits issued, right? Do they have some form of revitalization for downtown areas? Because if indeed businesses are moving there, people are moving there, usually the state government, especially if they're conservative minded and they're more business minded, they're going to go put money into building an area up. So I would look at the data to support what I already thought was a good idea. I wouldn't go look at the data to pick the area that I was going to invest in.
Yeah, I was thinking about Florida to be, that was one of my picks because I know a lot of people is moving there and then buying a lot of real estate in that area. So yeah, it's pretty hot market for sure.
That's where I am right now. I'm actually in Florida because of that very reason. So I think Miami, in my opinion, is probably the hottest city in the country right now. Okay. So I don't want to go buy in Miami where it's super hot, especially because you got to buy condos. And just as a real estate investor, you can't really add value to a condo. You can't find as good of a deal on a condo. It's kind of like training wheels. Like you're never going to go super fast, but you're probably not going to buy a complete lemon if it's a condo.
Yeah.
So much that can be, right? So I'm looking at cities where I think when Miami is too expensive, where would people go and commute into Miami? So that's my strategy, right? But I didn't go get that out of a website that had a bunch of numbers. That was common sense. And then I use my strategies for picking properties within that city where I went to. So there's a lot I have there. And I'm actually putting together a retreat that you guys can sign up for if you want to go to my house in Scottsdale. It's a beautiful house, 6,800 square feet, 5 acres, like probably the coolest property I've ever seen. And at the retreat, I'm going to be showing you guys very specific techniques for finding opportunities on market that other people are missing, how to specifically negotiate to get the prices that you want, where weak spots are, where people miss market properties, where it has more bedrooms or more square footage than what they're putting out there, what to target. And then I'm going to show you of the deals I've been buying, which is a lot. I probably bought, it's somewhere between 15 and 18 properties right now in the last like 45 days or so. And I'm going to show you every deal that I got that I use these techniques on and like what it worked out as. This is what was listed at. This is what the pictures look like. This is how we contact the agent. This is how we negotiated. This is how I got more money once it was in contract, all of that. So if you guys want to check the link there, davidgreen24.com/retreat. Is it retreats plural or is it retreats singular, Kyle? You going to double check that?
It is singular.
Singular. Okay. I think I've been putting out plural on social media.
We can make it so both go to the same page.
That's a good idea. Thank you. Thank God you're here. This is why I like having Kyle. I would never be able to do that in the middle of all this right now. But that's kind of what I think you should be doing is you're going to be around other investors. You're going to learn from what they're doing. You're going to learn. This is how I find markets. It's not what webs. I don't go to the U.S. Census Bureau and try to like figure out from what the data says where to invest. I'm literally talking to other people that have wealth that are putting their money and asking them, why'd you buy it? Just kind of like reverse engineering, dissecting what was their thought process. And you find a lot of them are idiots. They're just, I don't know, someone else did it. Or there was a little 10-page slide on MSNBC that said this is a hot market to buy in and they bought a turnkey property, right? Other people have very intelligent answers as to why they're buying. And those are usually the people that I pick apart, and that's how I choose the market where I'm going to be buying in. And then if I can find a person who's doing it already and I know what kind of returns they're getting or what success they're having, like I feel much better about it, then I'll go look at the numbers and verify that they weren't full of it.
That it's always a good idea to have someone local that knows the market and can help you out. So that's a great idea for sure.
Yeah, sometimes they help you put your core four together. Have you read Long Distance Real Estate Investing?
No, but for sure, if I'm thinking about out of state investing, I should do that for sure. Yeah, I'm aware of the book. And by the way, is that the retreat is going to be in the house that you guys acquired with what was the name?
Yep, with Rob. That's exactly right.
With Rob, yeah. Because I saw the YouTube video. So
yeah, so the retreat will be in the house. That's where everyone's going to meet. That's where I'm going to be presenting the information, walking. It's going to be like this isn't like Brandon Turner does stuff similar to this. I think he calls them like Maui Masterminds or Maui Master, something like that. His is more of a social thing. Like just go hang out with a bunch of people, do fun stuff, just kind of talk. Because his personality is like that. Brandon is very like fun. He networks. He finds the right people, right? I'm more of like dig in and dive deep on something, as you guys can tell from how long-winded my answers are when you're like, where should I invest? I'm like, I'm going to talk to you for 20 minutes about the why behind it. So this event is going to be more teaching very specifics on how to do this kind of stuff, it's going to be like mentally taxing. You're going to be pushed a little bit. You're going to have to tap into some emotions, because I think a lot of the reason why people don't take action, or they take the wrong action, it comes down to something to do with their own psychology, where it needs to be exposed. And then you got to figure out why we are the way we are. It's like the engineers of the world, they get in their own way sometimes. But then you have other people that don't do enough of that. They don't look at it objectively enough. And so they have to be addressed in a different way. So this would be kind of like, if you wanted to be in great shape, you would go get a personal trainer that would really push you and teach you how to work out for, whatever period of time. That's what this retreat is going to be. So anybody here, we still have spots open. I think it's halfway filled up, but still half of it's open. So check that out. And we'll be making videos of it to give to the people that go. So I'd like to see you there to kind of like dive in there a little bit deeper. But what do you think is the biggest thing, Mickey, that stops you from taking more action?
I think it's mostly because, that I'm not confident doing out of state, because, I like to have everything, to be perfect. So I'm kind of, scared to just invest somewhere where I don't have everything, like I said, on a spreadsheet, everything covered. So it's mostly the confidence, and unless you have, like I said, meet someone local that knows the area and have the team in place and everything. So that's going to be a big relief.
What's your local city?
It's Willowbrook, Illinois.
And what's the average price point over there?
It's around, let's say, between $250 to $350, something like that.
So that's going to feel safe for you, but I would say, just from my experience, you probably are not in the best neighborhoods. You're probably dealing with issues that are going to destroy your cash flow. So you're going to think you're doing well, and then the pipes are going to burst, or the boiler is going to go out, or the roof is going to get snowed on, and every time you think you're getting ahead, you're going to get sucked right back into losing your money. It's going to be this treadmill you can't get off of. Have you ever heard the phrase, grab a wolf by the ears?
No.
So it's kind of like a saying that we have in America. Imagine a wolf's trying to bite you, okay? And you grab its ears. Well, it can't bite you because you're holding it, but you also can never let go.
All right, yeah.
Standoff, right? That's what it's like when you buy properties out there. You're never going to they're not going to lose a ton of money, because they're always going to have a tenant. They're always going to be a strong price to rent ratio. But you're never going to actually be able to let go and move on to the next better thing, because things keep going wrong with them. You can't ever build up enough equity to really add value to the house or cash it in and move into a better market. So I'll ask you this. Are you open to vacation rentals, like short-term rental type properties?
Yeah, that's why, Florida was one of the picks, because I know it's pretty hot there for Airbnb, especially, after the COVID and everything. So I was thinking about it as well.
Well, if you end up reaching out to us, I can put you in touch with the realtor I use if you're serious about buying, because I'm buying short-term rentals out in this area. And then if you can, see if you can head out to the mastermind, look into that, and we can get to know you better there.
Okay, that sounds like a great idea.
All right. Thanks, Mickey. Appreciate you.
Thank you very much. Thank you for your time. And yeah, take care.
You are welcome. Thank you for coming to this questions. I possibly should have answered in this accent the entire time, but it was too difficult to speak at fast pace and also stay in character.
That's pretty good Russian accent, I will say.
I look like villain in Russian movie, no? It's like I'm going to play this part. All right.
You should hear David do a Scottish accent. That's the fun one.
Yeah, that's actually pretty solid.
Now, did I hear you say that Brandon is more fun than you? Is that basically what you said?
I think that's a good way to put it, man. Like Brandon's like, yeah, like skills schmills. You can figure it out. He's that like, just jump out the plane and build your parachute on the way down. And he can do that. That's kind of what's amazing about Brandon, is he does literally just string. He's like MacGyver, if you guys are old enough to remember that show. Just like you give him some duct tape and a paper clip and some chewing gum, and he can create a bomb that will like save the day, type of a deal. But what I've noticed about all of us that are sort of influencers in any space, we give advice from our own perspective. We can't help it. Okay. I only know how to teach you guys to look at real estate the way that I look at it. I only know how to focus on the things that I focus on. I tend to focus on building skills, being very good at what I'm doing, understanding it at a deep level, figuring out principles and fundamentals of whatever thing I'm doing, which real estate investing isn't a sport, but I kind of approach it like it. And then I don't overthink it, right? Like when I was playing basketball, I didn't think like, what move should I do right now? You built your fundamentals, you built the principles, and then you trusted your instincts when you went out there to go play. And that's what like every athlete does. So I'm going to give you guys advice along those lines. Like I tend to do better per deal than other people would. That'd be a strength of mine. I rarely make mistakes because I plan for a million things that could go wrong. That'd be a strength of mine. I like to dive into specific stuff and understand it at a deeper level. When I'm teaching, that's a strength of mine. But Brandon can outperform me in a lot of ways because he has different strengths and he doesn't get caught up in details. He's like, yeah, I'm just going to go hire Walker, and Walker's going to analyze 15 deals a day. He's going to pick the best one. I'm going to buy a deal every day. And I'm like, that sounds better than what I'm doing, to be honest with you. But I would never want to have to talk to that many people in a day. Right? Like, and you don't even understand how the real estate's working. So you would never be able to teach people what you did. Like Walker could teach people, but he's so busy looking at spreadsheets all day, he doesn't really know how to talk. So I'm not saying this to say my way's better, Brandon's way's better, anything like that. What I'm really getting at here is that all of us are going to teach you guys in the way that how we look at it, how we approach it. And so you kind of want to find the personality that you resonate with the most and have that person be the person that is your mentor, that you listen to the most, that teaches you, because you're going to take action from what they say. So you asked if Brandon was more fun than me. He totally is. And he uses it to make money. Like he puts these events together where people go whale watching and they have this like 5-course culinary amazing meal on the beach at sunset, and they wake up early in the morning and they go scuba diving, and like they cry and they laugh and they hug, and I'm just like, dude, I could never. That's so many people that I don't know, and I don't want to have to be around them all day. I would just be like, I'm going to my room to go like look at something or write a book or something.
Well, and Brandon does that even when he's not throwing on a master class or a mastermind. That's just his personality. That's his strength. That's what he does.
Thank you for saying it. That's what I'm trying to get at. Like he does his real estate because that's an extension of him. Right. And that's also like a sport. You would see when Kyle and I play basketball a lot together. It's actually how we met. We played on rival high school teams, and we had a mutual friend that played basketball on his team. And people's personalities are expressed from the way they play. If they're a selfish person in general, they play basketball like a selfish person. Right? If they're a not confident person, they play basketball like a not confident person. Like you can tell if they're like, they just have like a really expressive personality. They have different moves that are way more expressive versus the very conservative personalities. And I think it's important to know that about yourself, because you're going to invest the same way. You're going to be drawn. Like if you're a kind of person who's an engineer and you're totally afraid of risk and you don't know it, you're going to buy turnkey properties in the Midwest for 15 years of your life and end up with 20 properties and say, why did I even do this? They're worth $1 more than I paid for them 20 years ago. And the tenants are still breaking everything that I have. Okay. I'm not saying that's engineers are bad. I'm saying you need to understand that's the way you are. And conversely, if you're a Brandon, he had to get real with himself that he needs an engineer in his life. He needed Walker to come in and analyze all these properties because he wasn't going to do it. When he had 20 mobile home parks to look at, he just found something else to do. He's like, I'm just going to go surfing. I'll look at it later. He never did it. Right. So understanding your weaknesses allows you to kind of compensate for them. And then your wealth starts to build quite a bit quicker. All right. Do we have any questions here about specific to markets? How is their market going to crash, or is it going to take off? What about Ryan here? Let's bring in Ryan. Ryan, welcome to the show.
Hey, what's going on, David? How you doing?
I'm good. Who you got there with you?
I got my little guy.
Hi.
Can you wave to the camera? He's waving.
There we go. What's going on?
His teeth are coming in, so he's not feeling too good.
What's his favorite cartoon?
His favorite cartoon right now would probably be Cocomelon.
Cocomelon. Okay, we'll answer some real estate questions, then we could talk about Cocomelon.
That sounds good.
What you got?
So I don't think so. I'm in Boston. Well, I'm a little north of Boston. I'm in Marblehead, Massachusetts. And we've invested in the Worcester area, which is about 20 miles south of Boston. And the market's just been kind of exploding. Like it's last 10 years has grown 15%. Rents are going up. Prices are going up. So I don't think the market's going to crash there. We have 11 rental units, and they all cash flow really well. But I don't know if I should continue to buy more properties there or start pivoting to the short-term rentals.
So that market's not a short-term rental friendly space.
No, it's more of a buy and hold type.
All right. Is it getting to the point where it's so hot that people like it's not cash flowing very strong?
So we're actually cash flowing really well. That's the thing. So for each 3-family after expenses and everything, we're cash flowing about 1,800 on a low month and 2,400 without anything going too crazy.
And how much money are you putting into it, like, so we can figure out the ROI on that?
So we're putting 25% down, which we bought. So we've got 1 to 3 family.
To get 1,500 a month, what's your ROI on that return?
So we're getting it ends up being about like 9%.
Okay. Yeah, that's solid. And you've been seeing appreciation also, right?
Yeah, big time. So we bought 2 properties last year, and they've gone up. One has gone up about 75 grand, and the other one's gone up about 150.
Okay. Do you feel the market's being driven by real estate investors or people that don't want to be in Boston?
I think the single family is people that don't want to be in Boston, and the multifamily is definitely investors.
All right. So that I would expect the multifamily to continue to stay competitive, and the single family probably is going to go up too, but the multifamily will be capped. It's only going to go up so much because investors at a certain point, they don't cash flow if the price is right?
Exactly. Right.
So if that's your bread and butter, you're looking at multifamily, you're going to need to find another market because investors are going to push you to the point that you can't keep buying there. The single family homes are going to continue to go up. And it's probably like the same reason Miami's doing well is people are tired of the way the Boston politicians have managed COVID. They don't like all the restrictions. They're like, I'm going to get out of the city because I'm paying a premium to live here and everything's shut down. I can't do anything. And, it's falling apart. That's happening in a lot of big cities across the country. So I wouldn't necessarily think you need to sell. I think you're fine with keeping the properties, but finding another market does sound like what you should be doing in your position.
Okay. Because they've like redone everything, like the whole they've like revamped. They're in the middle of like just trying to it's like the up and coming area around there. So I think you're 100% right in that. It's just going to continue.
You mentioned short-term rentals. Do you have a market in mind that you're thinking might work?
Yeah, I was thinking in the Tampa area.
That isn't bad. It's very popular. And Tampa's a big city. So you're going to need to make sure that like the area in Tampa that you buy in is solid. I like it because I think people are going to continue moving there. And so it's kind of like, they say like winning is the deodorant that covers all the mistakes that people can make in sports. But the minute you stop winning, all those mistakes that are being made become drama in the locker room. What I don't love about the Tampa market is if people stop moving there, I don't know that it would necessarily be inherently valuable. Okay. So you have certain markets like Beverly Hills 90210 is probably like the easiest example to give. It's always going to be valuable. It's the best weather. It's on the beach. There's tons of money in an area like that. You're not going to see a crash ever happen there. You got other markets like Dallas has a very strong energy sector and a lot of businesses that are in that area that it would take a lot for those properties to not be inherently valuable. Okay. Tampa's kind of growing really quickly and there's still a lot of land to build on. So that's something I don't love. If you didn't have that, if it was an area that was a little more landlocked, like some of these other markets, I'd feel better about Tampa. But you're at the point where all this land is fine. It's not a problem until people stop moving there. People stop moving into Tampa. Now that actually could come to get you. So I would buy, if I was going to buy there, I'd buy in the best parts of the city. The parts where people travel to the most, maybe like in the actual downtown areas. You can get like location matters a lot versus other markets where like I'd say the Smoky Mountains in Tennessee, for example, from what I've seen, location is not as important. You can get a cabin in the best, like near the big cities that's going to do well, but it's a cookie cutter cabin. There's a whole bunch of other ones like it. They're a dime a dozen. You could go out further away 30 minutes, but you get a gorgeous view and a bigger cabin and more space and more privacy. There's still someone that's going to want that. Okay. So certain markets like that, it's kind of like 6 1, half a dozen the other, but I wouldn't say Tampa fits that. So if you're going to go into the Tampa area, I would definitely look at like the location is going to be very important. I'd ask my realtor, where's the part everyone wants to live in, everyone wants to visit, everyone wants to stay, and I would come up with criteria within that space, and I wouldn't venture outside of it.
Like walking distance to downtown, like that type of
If that's what people are going to Tampa for, that's exactly right. It's not like Orlando, where I imagine as long as you're somewhat close to Disney World, anything I will be okay. Tampa,
right. Yeah.
Really.
That's going to probably be driven by the downtown area.
Yeah, but Tampa's going to be expanding further away from downtown. So all the opportunity is going to be in the outskirts. You're going to see new construction happening out there. Prices are going to seem a lot lower because there's more inventory that's coming in. You're going to be looking at the downtown stuff like, man, that's so competitive. It's still going over asking price. You got to make a quick decision. The prices are higher. For only this much money, I can go over here, and it's going to be that tempting mermaid that's calling the sailor, the siren.
Yeah.
I would go for something like that if it was a market like the Smoky Mountains, where there's someone that's going to use any of those cabins for some capacity, because there's so many.
That's such a good point. It really is. I never would have thought of that.
That's why I'm bringing it up here, because I can't really get into this much detail on the podcast, right? But when I'm hearing, this is why a thing like the retreat we're putting together is so valuable, because as I hear people's actual ideas, my brain will then kind of dissect what they're trying to do, and it will find where the soft spot could be, or where you could get in trouble, where you could lose money. And I don't know how I do that. I don't know that I could tell you guys so that you do it. I think you just like look at enough markets and see it happen for a long time.
It's a gift, definitely.
It starts to be like,
I'm still bummed about that retreat too, because I just joined up for the mastermind, which was awesome. I had the first call on Thursday with Christian and Ricardo, and we're about to have another baby, so I'm not going to be able to make that retreat. Are you going to be doing more of those?
If it sells out,
in the future?
Yeah, that's the goal. Like if people like this, we'll just keep putting new ones together. Because to be honest, I love that area. I love that house. It's so fun to be shooting pool and talking and watching movies on the huge screen, and like having all that space, and the backyard is amazing. And the area in general, the people are so nice. It's like big. You're not cramped together. So I want to set it up to where I'm doing them there routinely, as well as like different short-term rentals I'm buying across the country. So I bought a lot of them in Tennessee. I could have a retreat at that one of those big cabins, right? And then the overflow people could sleep in the other ones. And then in the middle of the retreat, we could drive around and we could look at stuff that's for sale. I could have my realtor put like a tour together, and 20 of us could get in buses and or vans and drive around and go look.
That's such a good idea.
And I could literally have you guys be like a fly on the wall, hearing the conversation between he and I, and meet the property managers, like kind of see what I'm doing at a higher level. That doesn't make sense to try to do on a podcast for 200,000 people.
Yeah, definitely. No, that's awesome. I definitely look forward to it. So
congratulations. Does your son there know that he's going to be a big brother?
He does. Yep. He sure does.
Melon question.
What's that?
Is he going to ask a Coco Melon question?
Hey, bud, you want to ask a Coco Melon question? Hey, you want to talk Coco Melon? Yeah? Talk Coco Melon. he's being bashful.
You got shy there. All right. Well, thank you, Ryan. Appreciate you. Hopefully we see you.
Thank you so much. Definitely. Take care.
All right. Andy Barr. Is it Barr or Bear?
Barr. David Green, how you doing, sir?
You're welcome. I am doing good. Thank you for asking. What I can do for you today?
That's good. I'm jumping. Yeah.
Oh, wow.
I'm here representing Charlotte, the great Southeast, where everyone's moving and retiring. So, yeah.
Let me ask you a question before you ask your question.
Yes, sir.
What is it about Southern drawls that are so addicting that if you're around it long enough, it sucks you in? And I will catch myself starting to have a literal drawl involuntarily.
I think it's the friendliness.
It's the only accent. Like I don't accidentally start talking in Russian. Like it doesn't just like sneak its way in there. Right. But if I spend a couple weeks around people in the South, I'll just be talking like this, and out of nowhere, it'll just kind of come out. And you're like, whoa, I did not do that on purpose. Why did that happen?
I don't know if it's the whole like mirror thing, right? Like want to mirror the person you're talking with, but it just naturally happens, right?
I'll tell you the way it feels, right? And this is how I actually come up with analogies, is I get an emotion that reminds me of an emotion I've had somewhere else, and that's what births the analogy, right? It feels like when you're walking and you just kind of subconsciously end up taking the downhill road if you're not paying attention. So like if you're walking just aimlessly and the road starts sloping down, you'll go in that direction without knowing that you're doing it, right? So you have to make a conscious effort to not walk downhill. That's what a southern drawl is. If I do not pay attention, it just sucks me right in to the bottom of it. So you seem like you've done a pretty good job. Is that not very strong in Charlotte, the accents?
It's all the Northeast people moving down.
So they're kind of balancing it out.
Yeah, because I'm from Ohio originally and spent 10 years in Chicago, and so
I'm amazed, man. I was just in Tennessee at the Smoky Mountains for like 4 days. I got to Florida 2 days ago, and I'm from California, right? I just assume everywhere's like where I'm from. We drive 4 or 5 hours and we are still in California, right?
Right.
Out there, it's like everything is so close. It blows my mind how you could drive an hour and a half. You're in a completely different state in a huge city, and go an hour and another way and you're in another state in a huge city. And I'm like, that's less time that it takes me to drive to Kyle's house in Sacramento.
No complaints.
Yeah, it's awesome. I think that's one of the reasons that I really like that area is like people are moving there because you've got all these like cool national parks and rivers and lakes and streams and places to hunt and fish. And they're all kind of like, you could be in a different state with all kinds of new cool stuff to do in a day's drive or less.
It's like you don't have Ohio winters. You don't have Florida summers. You don't, it's 2 hours from the mountains, 3 hours from the beach. It's a pretty good spot.
All right. So what's your question for us today?
So I do rent by the room by the month.
Okay.
I buy a 2,000 square foot house, late 70s, and get rid of the dining room.
Are you one of Sam's students by chance?
I'm not one of Sam's students, but I know Sam very well.
You sound a lot like what he's doing, and he's in your hood.
Yeah.
All right.
So my question is just, do I just keep going, right? And I'm at 4 units now, or 4 properties now, closing on a 5th next month. And I'm like, okay, do I just keep going, get to 20 or 50, and just, I'll be one of the Charlotte landlords, or do I go an STR in Orlando as well, just to provide more of a lifestyle, right? More of a lifestyle addition. You
have hit like, I'm trying to think of an analogy. I can't think of one right now. It's just the perfect scenario. Like Sam, I don't know how, I really want an analogy here, and I'm not coming up with anything for how good what he's doing and you're doing in Charlotte. You can scale it in like there's so many properties that'll work for what you want to do. It's low risk and it has high upside. The area is growing a ton, so you're getting all the appreciation and you're getting the cash flow. Mm-hmm. There's a ton of demand, so you're not going to really run into a downside to doing this. You can buy big houses, small houses. There's plenty of inventory to pick from. Like there's hardly any weaknesses in this little niche that you got yourself into, except for the work, the management of those assets. So if I was in your position, I would go balls to the wall, like as many of those things as I could get in the best neighborhoods I could, and hire a person to manage them. And just like get that person pretty squared away with doing it. So you are just always acquiring properties. And then I would raise money to buy more of them. Like that's how big I am on there is no weakness. It's very rare you find a thing that doesn't have like, okay, this is great, but I'm losing on this end. Charlotte's growing. You're getting equity. You're also getting cash flow. It's not hard to find the properties. I've gone into that already. I don't see any reason why you should go fight with anybody in Orlando and deal with whatever other people are dealing with when you're sitting on like probably the best opportunity in the country right now in Charlotte.
Well, that's really great validation, because I've got a phenomenal handyman, right? Who comes in, puts up the walls, makes the bedrooms, and the 5th house that closing next week is going to be the first one that'll be with an investor. So I'm kind of like, breaking that seal. The only thing is it's a 2-year loan, debt only, not equity. So obviously I'd like to have more of like a 3 or 5 year debt term. But besides that, yeah, I'm excited.
Dude, if I was there, maybe at some point I will be, and I found a person that can manage them for me, I would just be buying like a house a month on that model that you guys have.
Because you're just looking Alan Marshall with DSCR loans.
How's that going with him?
Good. I didn't use him on this, but he refied one of my other ones. So yeah.
Nice, man. Are you going to use them? Well, I guess the DSCR loans, they probably can't use the income from the rent by the rooms, right?
I don't know about rent by the rooms, but he can do STR rental. Yeah. So that helps versus 12 month.
Yeah, he's great. Alan is like one of those guys that is a sniper himself. He doesn't miss too often. He's very careful, very cautious, make sure he anticipates as much as he can. So hopefully we can keep working with you for future purchases. I'd keep doing that, dude. Like I do it at scale, and then I'd start just paying people like kind of what I do, where I just pay people interest to borrow their money. I'd feel very good doing something like that in the market you're in.
Yeah, because even if Airbnb shuts down, okay, Craigslist, Facebook Market, there's always someone looking for a room.
That's exactly right. Yeah. And the turnover's less. You don't have to bring the cleaners in. If you ever did get the bug, like I just need to try something new. I've eaten the same food every single night for the last 3 years, because that happens sometimes in what we're doing.
Yeah.
I would just look for doing them to like traveling nurses. I'd still do rent by the room, but I just buy nicer properties in nicer areas and finish them up nicer, and then put them on Furnish Finder or something like that, and rent them out to traveling professionals.
Yeah, you said one time on long time listener, first time caller on Bigger Pockets, and you said one time all the strategies. I think it was like a few months ago. You're like, just buy a house in the best area once a year. Yeah,
and then from there find a way to make it work, which is what you did, right? I think most people approach it backwards. They're like, okay, how do I get the most cash flow I can possibly get? How do I get my ROI as high as I can possibly get it? And then they're like, well, I got this dump in a trash hole. How do I make it work? And
right.
like, that is it. I'm like, no, I want to be in the best areas ever. How do I find a way to make that house work? And then that's where the creativity comes in.
Awesome. Thank you, David, for everything. And you and Rob Bilton are crushing it.
Thanks, man. I appreciate that. Thanks for being patient too, Andy.
Absolutely. Thanks.
What a friendly guy there. Very likable fella there. Kyle, what do you think?
Very friendly. Everybody from North Carolina is friendly, though.
It's everyone in the South. It's like so hard to find anything wrong.
Southern hospitality.
Yeah. Although I haven't seen everywhere in the South, right? I'm sure that there's places that have their problems just like everywhere, but like the popular places where someone would go visit seem to be pretty awesome.
Yes, absolutely.
All right. And we got another Southerner here. So let's bring in Ashley M.
Hey, David.
Hi. Can I ask you, did you put M on your name because when you were in second grade, there was like an Ashley T and you had to be known as Ashley M and it just stuck your whole life?
That did happen in kindergarten, but there's not, I don't know. I just went for M.
in seventh grade, there was 4 Davids in my class. In one freaking class.
Yeah. I am a physical therapist, and in the class below me, there were 3 of 60. So it happens.
That's quite a few. Okay, Ashley M. I just think it's funny that did it ask for your last name? You didn't want to put your whole last name in. Is that why?
I don't know why. My last name's Menace. I just got married, so now it's Stig. So I'm in between.
Ashley Stig. That kind of has a nice ring to it, like 2 syllables, then 1 syllable.
Yeah.
It used to be Menace, you said?
Yes, like that. Yeah.
Okay, I see why you would leave it as an M if your last name was Menace, like Ashley Horror, Ashley Terror. Okay, so anyways, enough of my stupid questions.
My husband is in the Army. We're currently in Augusta. We closed on our first rental property in less than 10 days. Very excited. We're financing it with half of it is savings. Half of it is a HELOC from our primary residence. It's about a $200,000 property. We plan on burring. Gonna do most of it ourselves, but I'm trying to decide if I should wait until we finish the burr to buy our next property. What type of property in the area I should try and buy, because it's a wide range here of low income to a pretty significant income from block to block. And we also have the Masters, which is really awesome. So this home that I bought is a mile from the National. So I'll be able to use it as a Masters rental too.
Okay.
So I guess I'm just in a unique market and I'm wondering which way you would go. And I don't want to over leverage myself.
But it's hard not to. Are you one of those people like me that when you go to the buffet, you tell yourself, all right, I'm only going to get the best food and I can always go back and get more. But then you just start loading up your plate. And the next thing you know, like you come back with more food than you can eat.
Definitely. And that's how I felt like on Zillow. I'm like, okay, this is the perfect flip property. Okay, this is the perfect like nurse short-term rental property. And I like keep pinging from idea to idea. And then I went to school in Miami, moved here a year ago. and I'm kicking myself for not buying in Miami 3 years ago. But then I'm like, should I short-term rental in Miami or in Savannah? Because that's only 2 years ago, or 2 hours away. So I guess my mind is kind of all over the place. But I guess my biggest question is kind of where to go without over leveraging, and which kind of price range maybe you would suggest in this sort of market.
Well, okay, there's a few things that you want to make sure you want to get right. And if you get those right, it's not, it's just a question of, if you get those things right, what's the way to maximize my return? You're not going to lose. Do you remember what those two things were that I said earlier?
Maximize return?
No, in order to make sure you don't lose money in real estate, what are the two things you got to get right? You might not have been here from the beginning. It's okay if you don't know. I had this epiphany when I was working in law enforcement. So I think actually one of my coworkers, Hashmat, is here on this call right now. But I was learning how to be a use of force instructor, and one of the senior guys was teaching me something, and it had to do with the rules of firearm safety. So anytime you're handling a firearm, your husband knows this because he's in the military. Are you also in the military, Ashley?
No, but my dad is, so I've spent my life around it.
So you got 4 rules. Off the top of my head, I think they are: always treat a gun like it's loaded, never point at something you're not willing to destroy, know your target and what's behind it. Oh, I was so afraid I was going to blank on one of these things. The firearm people are listening to this like screaming what that 4th one is right now. Never put your finger on the trigger. Did I say that one? I think that's probably what it is.
Yeah.
Don't put your finger on the trigger, right? So I knew those. But he made this incredibly insightful comment, even though he was a bit of a butthead of a person. I have to give him credit. This was really smart. He said, you can violate one of the rules and no one will get hurt. But if you violate 2 of them at the same time, that's where you can have like an accidental discharge. So if I don't put my finger on the trigger, but I accidentally point the gun at a person when I didn't want to shoot, they're not going to be shot, right? If I do have my finger on the trigger, but my gun is always pointed in a safe direction, no one's going to get hurt. If it actually shoots, it shoots into the ground. And something about that stuck with me. And now that I'm in real estate, I've learned, like, I think that like it was God saying, pay attention to that because life works that way. And now I see that applying in other areas of life. When it comes to real estate investing, the only way you ever lose the only way you lose money is you lose a property to foreclosure. If you hold any property long enough, it will make money. Okay. I challenge anyone to go back 30, 40 years in the past and say, that property would have lost so much money over the years that it wouldn't have made money over 40 years. Okay. So in order to keep your properties and not lose them, you have 2 things that don't go wrong. You can never run out of money to make the payment. If you run out of reserves, you are in a position now where you could lose the property if it didn't cash flow. Okay. So cash flow is just a form of reserves. I look at it. I don't look at cash flow like it's going to change my life. It's going to make me rich. Cash flow is how I don't lose a property. The other way I don't lose a property is I keep a lot of money in savings, right? And then the other half of it is you have to, if you did run out of money, you could just sell it. So you have to not be able to sell it and not have money, okay? If any of those things are not in place, you're fine. You're going to be all right with real estate. So the first question you should be asking, Ashley, is, am I in a position where I have enough money set aside that if I couldn't sell the property and I couldn't make the payment, I would still have money that I could make the payment for 6 to 12 months. Mm-hmm. What do you guys think about that? Like your financial position?
Right now we are making enough month to month that we have a cushion each month that's bigger than this new mortgage payment.
Okay. How many of those months of savings? I feel like Dave Ramsey right now. All right. And how many of them months of savings do you have?
Not enough, probably.
Okay.
3 or 4. Here's
what I'm going to say. I'm always like, buy more real estate. I love saying that. I do it. Okay. I also have a philosophy, like a theory that it came from, to be frank, I get to say stuff here I can't always say. I don't like when people come and say, how do I buy real estate with no money down and no credit and no job? And this is not applicable to you guys. Obviously, your husband has a great job and you guys are getting married. You're doing the right things in life. But there's a lot of people that kind of would come to Bigger Pockets and they would say, like, my life sucks. How do I make real estate make it better? Mm-hmm. And be like, well, how about if you just stop sucking before we talk about buying real estate where a tenant is dependent on you to make your mortgage payment and like you're wanting to borrow money from somebody else that saved it and worked really hard and you don't even know what you're doing. I'm okay with real estate being the carrot that we chase that helps us turn the rest of our life around. I actually think we need that in life. So the reason I finally put this retreat together in Scottsdale that I've been thinking about doing for years, and I should have been doing for years, like I could have made several millionaires over the last 3 to 5 years if I'd have been doing these more often. There was always something else to do. And I just didn't want to literally, I didn't want to put the logistical effort towards putting the event together, right? I did it because I'm buying a lot of real estate right now. And I'm like, man, I got so much stuff to talk about, but now I just need to make sure I got more money coming in just in case there's a black swan event, just in case the Budweiser virus is the follow-up to the coronavirus and we have like a new issue, right? I'm like, well, I've got, and I don't want anyone from the cartel coming to kidnap me or anything, but like I keep a significant amount of money in reserves, right? It's not like I'm in a position where it could be risky, but I'm borrowing money from people now to buy real estate. And there's a little voice in my head that's like, what if? And that little voice makes me not want to buy.
Mm-hmm.
So I put these things together where I'm like, well, now I'll just add this much money every month from doing this many events into my reserve account. So even if everything goes wrong, now that little voice shuts up. Okay, fine. And now I'm going to keep buying, right? So to me, the buying real estate is the carrot that forces me to put events together, to do lives like this, to continue building businesses, to continue pushing agents to sell houses, to just do the stuff no one wants to do, right? Like,
Yep.
You know what it's like. I guess you don't know because you're just now getting married, but you've probably seen the element of human nature where when you get comfortable, it's not like your best effort comes out every day.
Mm-hmm.
Okay? Like people get married and they now treat their spouse worse than when they dated them. They let their health and fitness go. They stop paying attention to someone like they used to. It's normal. When you get comfortable, it does not bring the best out of human beings. Okay. So we need incentives. We need carrots to get us to kick our butt into gear and to do better. And I was giving an example out of my life of how that would work. I can tell you got the bug. You're like me. You want to fill that plate up at the buffet. You're like, this is so freaking fun, man. Like I'm out here trying to buy new properties and I'm realizing we haven't even got Wi-Fi set up on the ones I've already bought. It's a mess. Like my poor staff is frantically trying to keep up with all the stuff they have. We're trying to like shop for furniture and get stuff in. But some other things that I've like major things that I'm like, no one's done that yet. We still don't have the contractor that we closed on that place a month ago. They haven't started work. We're waiting on them to get back to us. They can't keep up with what I'm doing. And I'm out here like, buy more, load that plate up. So I get it. Like I'm not the person who's sitting here saying, don't do it. That drive is a gift. Use that drive to make the changes to your guys' spending to where you're actually like really focused on putting money away in savings. Okay. Is there a side hustle that you've wanted to? I'm assuming you don't work. I don't know why I'm assuming that.
I'm a therapist too.
A physical therapist?
Yep. Yeah.
Okay. Is there anything you can do to make more money in physical therapy that you're not doing because you're comfortable?
I could work like PRN on the weekend.
Okay.
So that's something to do.
Can you get time and a half or anything like that?
On days I can. And weekends sometimes.
What if you just made it a commitment to see if you could maximize the time and a half hours?
Mm-hmm.
Not just work more hours, work the most efficient hours that you can.
Mm-hmm.
Okay. And you don't need it for your whole life, but like say, look, we need to get X amount of money in savings, $10,000 that we're not going to touch, something like that. Okay. Right now we're saving $1,000 a month. If we bump this up and we work this much and we save this much money, we can have $10,000 saved in 6 months or in 8 months or something like that. Put that goal in place that is actually attainable. You can see that mile marker. It's not like you got to do this for 5 years to get out of debt, right? That's the problem with like the Dave Ramsey method is like, who wants to work for 12 years before they ever buy a house, and houses cost 3 times as much money when you finally get there, right? Inflation is like taking what would have been a really good practice and destroying it. But you can do it for a short period of time. With that, I want to buy real estate as your carrot.
So would you wait to pursue a second and third or fourth? So we sure.
The only reason I would tell you specifically to pull the trigger on a second would be if it was an incredible deal that you couldn't pass up.
Okay.
But I wouldn't. There's times where I'm like that, where I'm like, you know what, I'm good. I got enough other stuff. I'm really busy. If a great deal comes along, I will prioritize buying it, but I'm not going to go look for it.
Okay.
There's other times where I'm looking, but I'm only going to pull the trigger on the great deal, which is like if I don't have a ton of capital available. And then there's times like me where where I'm flush with capital and I have the time, where I'm out purposely looking at properties and I'll pull the trigger on something that isn't the best deal ever, but it's a very strong deal for like the long term, right? Or it's good enough. And I'm buying a lot of those properties. So at different seasons in life, I think you approach it differently. At this season, my advice to you, like if you were coming to this retreat in Scottsdale with your husband, I would tell you guys, you need to be really focused on how you can save more money and get that down, make that a habit. And then when you've got it, you can be much more aggressive with your investing, which will build wealth and be fun.
Mm-hmm. Okay.
Don't get those mixed up though. If you get in the habit of buying a bunch of houses, this doesn't happen often, but some people have that makeup. You come back to the table with this much food, and then the person says, yeah, there's like a fee if you don't finish your food. Have you ever been to a buffet where they do that to you?
No.
That happened one time in Reno. They have like unlimited sushi, but they don't tell you that you have to pay for the unfinished food.
Oh gosh.
Yeah. You know that feeling like, oh shit, like what am I supposed to do with all this now? I'm stuffed. You don't want that to work out in real estate where you're like, I got all these houses and I don't have any time or money to complete the rehab.
Yeah.
Right. I've seen that happen where people came to us and like, we bought 5 houses and now we don't have enough money. And I'm like, okay, that's like having 5 movies downloaded 90% on your computer. That's as equivalent of nothing. You can't watch anything, right? You're better to get one fully done before you go in the next one. That's a scenario I'd want to see you guys avoid.
Awesome. I hope you do it soon.
Ashley, last thing, if you can use the VA loan to buy a cash flowing property.
So
right?
our primary here, and I guess our second half is with the VA loan. And when we already built about $100,000 of equity into this house, just having it 2 or 3 years, because this area is getting so much more cyber, so it's growing. So
you don't want to refinance it because you don't want to lose your rate, right?
Yes, it's 2.25. So
well, that part would suck to lose, but if you did refinance it and you were able to use a new VA loan on another property,
yes,
that's an option.
We have talked about that when we move from here, so we could continue to cash flow with this as a rental and then use it when we move. So
it would let you scratch that itch.
Continue
saving the money.
You utilize the VA loan.
Okay. Thanks, Ashley.
Thank you. Great to meet you.
Thanks, Ashley. David, before we get to the next question, I did want to throw it to a question that we had in the chat. So this is somebody we don't necessarily need to bring in, but knowing you, I think you're an expert in this. So Jenny had asked the question, hey, David, what's the protocol for when you find yourself face-to-face with a black bear?
All right, let me give a little bit of background before I answer that question. And thank you for putting the question up there, Kyle, because I would have forgot it. We interviewed Avery Carl for the first time on the Bigger Pockets podcast, and she told this ridiculous story of a review she got on Airbnb from someone who said, you know, everything was great about the house, but it wasn't very safe for like bear invasion. There wasn't enough modes of egress in case a bear came in the house. And I mocked this human being because that was just such a ridiculous thing. I'm picturing like Dwight Schrute from The Office, who's like, this house isn't very bear safe. Like, or like, he's like, yeah, if we were ever sieged, we wouldn't make it. Right? That's like, it's hilarious. That's how Dwight would be thinking, you know, like there's no drawbridge, there's no moat, there's only one way in and out. Well, then I went to the Smoky Mountains and I put a video on my Instagram, if you guys saw it, on my story of a literal, I'm at the house walking through it, and the cleaners who are there turning it for the next people say, hey, y'all, just, you probably don't want to head outside. There's a bear on the porch. I was like, a bear on the porch. I was thinking like signs of a bear, like scat, or like you could see a bear from the porch or something. No, I walk up to the sliding glass door, like literally like right here next to me. And there is a bear walking around, just no F's given. And I was like, oh, that they're like a dog, like your neighbor's dog just wandered right up to yours. Even like deer aren't like that, right? And so I could see that bears do go in homes, like they can open the doors of cars. And I thought like, oh, if this was real, and it is real, I now feel kind of bad for mocking who I thought was Dwight Schrute with his comment about this isn't very safe. Because if you're like a person who just is a little more fear prone, you're going to be terrified of that bear getting in the house. And like, what am I going to do if he does get in the house? So I came face to face with him, but I know I was behind a car. Let me not make that sound out like I was more brave than I was. I had one that I drove up to, and it was literally like its butt was touching my car. I was like filming it. It was eating in a trash can. Did not care. This huge, big white car. They just don't care at all. Like they're an apex predator. You can tell those things are not afraid of you in any way. And several of them that just like run in the street and stare at you. So what they say is you should get like big and scary and be like, oh, make a bunch of noise. I would only do that if I thought the bear was actually going to attack me. Like I'm in a fight, I have to do something. I wouldn't probably provoke it, but just because you get scared and make all that noise. I also realized Jenny might be completely mocking me with this question, and I am actually answering it literally because, like I said earlier, I can't help it, right? Like Brandon would take this question, he would have fun with it, and then I, like a moron, am actually answering a question that nobody in this thing would be really looking for a literal answer. What I did find out, because several houses I was looking at there, you'll see like the trash when you go out in the morning, like they keep their garbage cans outside in these like big metal bins so that the bears can't get it. They still get in there. So in the middle of the night, bears are going into your backyard and ripping through your garbage cans and just making a huge mess. Like you'll see these big trash messes. Sometimes these houses are built on hills. And so I'll be sitting on the deck looking down at the forest underneath me, and I'll see just like big piles of trash that maybe from like a year ago a bear got into and just left it down. No one's going to go in there to clean it up. So there's like quite a bit of bear action. How did I do, Kyle?
That was great. Have you ever heard Jim Gaffigan's bit on bear spray?
No, but I like this.
It's hilarious. I'll look it up and send it to you. But it's like he looks at it and they give him the bear spray when he was in Alaska and, you know, on the last terrain or whatever and walking around. He's like, "You're giving me bear spray? This seems like the least helpful thing that you could ever give me." It's like, here's a can of hairspray to protect you against a bear.
Not a gun, right?
Yeah.
I think what they use up there is like firecrackers. They don't like the loud noises. I would also say these black bears there, it's like the potential is there. You could get hurt, I suppose, but it's not actually scary. I would want nothing to do with a grizzly bear. That's a completely different story. Yeah, they're both bears, but like a grizzly bear is a completely different ballpark than a black bear. Like I would go nowhere near a grizzly. I think mostly I wouldn't be afraid of a black bear unless the cubs were around. That would make me a little bit nervous. But absent that, I think they're just going to kind of like ignore. They're not really predators like lions, right? Like a lion would hunt you and kill you because it does that for fun. That's what they like to do. I think bears aren't really built that way, but a grizzly bear would be. Those things are terrifying. I stayed up really late one night. Never have I told another human being this story ever. You guys are hearing it now. Watching a YouTube video about who would win in a fight between a grizzly bear and a gorilla. And it was a fascinating video. Like they went into such depth of the different angles. I'm also like a really big, bald 7-year-old in many ways that I was fascinated by that. Curious, in the comments, who thinks that the bear would win and who thinks that the gorilla would win? Let's see what you guys have to say. I wish there was like a way we could do a poll. That'd be kind of funny. Kyle.
Yeah, that would actually be really cool. I got to go gorilla on this all the way.
Somebody put, remember the Budweiser frogs. What did that come from?
You had made the coronavirus, Budweiser virus joke.
Thank you. All right. Ash says bear. JT says gorilla. Carmel says bear hands down. Marnie says bear all the way. Benjamin says a gorilla, especially if it's a silverback. David says maybe she meant burr, not bear. That's funny. Manuel's going gorilla. Frederick says it was a baby bear. Justin Lee, grizzly bear. Is this the same Justin that works with my social media team?
Yeah, probably.
Hey, Justin. Thanks for being here.
What's up, Justin?
Jim says, oh, frog and beers. He's going with the Budweiser route. That's funny. Chester, okay, I'm going to give it to you guys. Silverback gorilla. Who wins? Rob says gorilla, but both would die. That's funny.
That's a good one.
Oh, nothing, Justin. We just wanted to say hello. Glad that you're here. Jimmy Wisecarver says, I'm going with the grizzly bear. Let me tell you guys something about Jimmy Wisecarver, who's here right now. He comes to every one of my meetups. He is a legend in his profession from all accounts. I really like this guy. I'm going to stop this here just because Jimmy commented, and he's right. Even if he was wrong, I would still say he's right. Jimmy's like the Dos Equis, the most interesting man in the world, right? Like, wasn't there, he can speak French in Italian. And I think there was one where, like, I don't remember what it was, but if you knew you were right and he said you were wrong, you'd believe him or something like that. That's Jimmy. So the problem with gorillas, and I hope you guys don't mind us talking about this right now because it has nothing to do with real estate, but it has everything to do with why I stayed up way too late watching this YouTube video. is that they tend to use their jaws and their teeth when they fight. They bite too much, and they have a very strong, like incredibly strong, like bite, whatever they measure the PSI of their bite, but they don't get their mouth open that well. And grizzly bears have a pretty thick skin with all that hair. The gorilla could win if it was like punching, like how we see King Kong. But in this documentary they made, they went into all these documented fights of gorillas and they never really punch. They're always just like beating their chest, pounding on the ground. Maybe they hit once or twice and then they try to bite, which works on other gorillas because their skin is actually very soft. So you can cut and slice apart another gorilla's skin. This is very funny how I'm getting this depth, but I thought this was fascinating. And grizzly bears are like nothing's like they were believed to be unkillable when the first settlers like Lewis and Clark were first venturing out into the wilderness. There were these reports of these animals that were like unkillable. They would just fill them full of bullets from their old muskets and they couldn't stop the bear at all. And it would just like rip through anything. Like nothing ever challenges a grizzly bear other than another grizzly bear. So it was actually like when they played it out, the gorilla would lose pretty much every single time. But what I thought was fascinating is that I expected the gorillas to be like smart. They're like monkeys, right? So they're like going to hit it over the head and like rattle its brain, but like they would
use a tool or something, right?
Yeah. Yeah, that's exactly right. I've also become addicted. I don't watch TikTok because Brandon Turner warned me. And Kyle, you might have been there in Hawaii when we had that conversation about how addicting TikTok was. Remember that?
Oh, yeah. Yeah.
Remember those memes that were really popular? Jimmy Weiscarver, you'll probably remember these. It was like meth, not even once. And it would show like, you know, a person like normal and then what they look like after methamphetamines. And like they had one that was like R2D2 and then it said meth, not even once. And it was like this really effed up trash can that kind of looked like R2D2. That's how it was told TikTok worked. Like I love the comments here with all these people that are
this is fun. Yeah.
The gorillas and the grizzly bears. What was I saying a minute ago about before I got into that?
Oh, we were talking about Jimmy. You were talking about everything.
Me here. What advice was I just talking about when it came to, was it grizzly bears still and gorillas? Oh, TikTok. I just was told don't go on it. So I didn't put it on my phone. I have a social media team that posts on there. What is my TikTok, by the way, Kyle? Is it David Green Official or something?
It's official David Green with an E at the end. So
we're working on that. At some point, we'll make better content. But I think if you guys want to follow me on TikTok now, you can. Also, please like and subscribe this video. But what I do is Instagram will like recommend little short videos for me, which I think come from TikTok. And I got fascinated by how many videos there are showing like African savagery between these animals out there. Do you ever watch those, Kyle? Like, does yours recommend them to you?
I don't get them recommended to me, but my kids love watching that kind of stuff.
It's my inner 9-year-old that cannot get enough of it. I'm like, there is a leopard that will jump into the river and fight with a crocodile and come out with it in its mouth. And you're like, there's no way. That's happened once in the history of the world. And then it's just video after video of these freaking things doing that. Lions climbing up into trees to get after monkeys that are like trying to get away from them. Hippos eating lions that are in the river. Just like wild stuff. That
you just start riding that algorithm.
Yeah, and I'll get stuck. Like, luckily, Instagram will only show like 4 or 5 at a time because I can't get. Then I'm like scrolling through the feed to try to find the next group of like some bird. Like, there's just one of this fish that someone probably knows the name of it. It like flies out of the water to avoid predators. So you'll see this like really fast like shark or fish swimming after this little kind of like a feeder fish. And it flies up out of the water to get away, right? So it's like soaring, and then it comes back down, and then the other fish will swim up, and it'll jump up to get away. It's like, wow, that is amazing that fish can do that. And then out of freaking nowhere, this like eagle will swoop in and grab it out of the air. No one sees it coming, man. Like the cameraman, it shocks you, and you're like, this is happening in nature every single day. So whoever asked that question, Jenny Lee, about black bears, you definitely brought us down a very fun rabbit hole. So thank you. And look at the comments.
Yeah, thank you, Jenny.
Grizzly bears can run at 35 miles an hour. Christoph says, I love those same videos. Okay, you guys are liking this. That's funny. All right, let's go to our last caller here. Is it Jeffro? Am I saying that right?
Yes, Jeff. Jeff is my name.
Jeff. Okay.
How are you, Super Dave?
Good, man. Thanks for being patient and hanging out there for a while.
Yeah, man. Thanks.
Super Dave, wasn't that like the guy that would fly his bikes over cars when I was a kid?
I did race professional mountain bikes, but I
No,
don't
wasn't there a
have it.
guy named Super Dave something? Is that where
Oh
that
yeah,
came
there's
from?
a
What's his last name?
Daredevil movie
Yeah.
or something, I think.
I think he had a
Something.
cartoon too. It was
Yeah,
like Saturday
that's
morning
right.
cartoons. Yeah.
We're old.
Maybe that's where I got it. I don't even realize it.
Appreciate it. I don't have Brandon Turner on the podcast to call me the man anymore, so my ego got boost.
Well, thanks for that bear rabbit hole. I can't wait to like go down that later on YouTube and watch.
Wouldn't it be fun if that's the part of this whole thing that went viral, is us talking about grizzly bears? Or if like one of the people who came in argued with me and they're like, no, it'd be the gorilla, and we got into this really controversial back and forth.
I was going gorilla all the way, but it may after
I was kind of
explaining
leaning that way too when I watched the documentary. It was the whole their bite is how they fight thing. That
yeah, which I wonder why, since they got pretty long arms and they're strong, but I don't know. Evolution.
yeah.
Anyway, yeah. So
there it is.
thanks for having me on. I'm just curious if you had any advice on. So I'm pretty risk tolerant, kind of the adventure guy in my marriage, and we have 2 rental properties. We actually live in your neck of the woods out in I'm in San Jose, but I grew up in Texas, but I don't have my accent, sorry. But
there's plenty of us that do spend a little
yeah.
time. Wow, it just comes right at. You know anyone who wants to buy Kyle's listing in San Jose?
My wife.
Bring me a buyer.
But she likes it to be perfect, ready to go, like she wants.
Oh, yeah.
So
let's dive into this. Tell me what you think is the genesis of your wife's aversion to risk and why you are more comfortable with it.
Well, I've always kind of been an adventure taker and very risk tolerant, adrenaline junkie, and not afraid to just, try something and willing to like, learn from it and fail or whatever, And she kind of grew up in a very strict family. She's Portuguese, and her dad is very strict, and she's an only child, and I always joke with her, she was kind of raised in a bubble, which she sort of was. So she's just very conservative, kind of an introvert. And she's 47 and never even had a car loan, paid cash for all of her cars. So very, very afraid of any debt, even if it's, rental property and someone else is paying the debt. It's just hard to get over that fear, and the idea of like investing and trying to get other people, to pay your debt, to create this wealth and this passive income and stuff to grow our wealth and everything. And we're both nurses. We have good jobs, so we have a strong W-2 income, and it's not like it's not like I'm jumping in and buying $3 million homes or anything that we could get slaughtered if we don't have a renter. Where I bought a place. My first place was a new build in Texas, and then that kind of got the bug going. That was almost 2 years ago, a year and a half ago. And they got me down going down the Burr rabbit hole and out of state and all that, investigating and learning and just obsessing. And then I bought a cheaper low-end place in Indianapolis. That's a cheaper, like $70,000 home that cash flows good, but like you always talk about, it probably won't appreciate a ton or anything. But I want to take that next leap and keep going, and learning and investing. But it's just hard it's hard because it's stressful. It's a lot of work and it's a lot of stress, and it's hard for me because I've kind of bulldogged my way into these 2 with her, which I don't like and she doesn't like. And then I kind of want to share it with her, and I want to be able to bounce ideas off of her and the fears and the stress and the good stuff, but it's hard to get her. I don't know how to get her on board. And I've tried to get her to read books and do stuff, but she's just not really too open to it. She's a more of a Dave Ramsey mindset. She just wants to pay off our home here, which we have a ton of equity in. And, if it was up to me, we would take money out and buy more property. But she's just really afraid to do anything like that.
Well, all right. I'm not married, so I'm actually gonna let Kyle answer this question first. I'll see what advice I can give you from a psychological perspective. But I hear a lot of investors that ask the same question. I'm like, one of those times where I'm glad I'm not married. There's a lot of times where I'm like, oh, this dating is so miserable in today's. Like, you're so lucky that you got a wife. But then when you want to do this kind of stuff and all they see is risk, right? They miss the 95% of it and they focus on the 5% could go wrong. So Kyle, as a married man for how long now? 20 years or something?
17 years of, by the way, if people don't know, you were the best man in my wedding.
That's true. I gave a speech first time I ever did it. Kyle might even be able to post some pictures on his Instagram about that.
Yeah, definitely. And just to kind of recap for those of you that didn't get the question. So Jeff's question was, how do I get my wife on board specifically with real estate investing? She's very risk adverse and scared, yet he's tolerant to risk and willing to take the leap. Is that pretty much sum it up, Jeff?
Yeah, for sure.
So I want to ask just a couple more questions, if that's okay.
Sure.
So your wife has been on board to some degree with you buying the investment properties in Indy, correct?
I wouldn't so much say she was on board. I kind of bulldogged my way and just kind of did it. And it was kind of like do now and ask for forgiveness later, more type thing. Which she's very tolerant of a lot, and she puts up with a lot because I mean, we got married in our 40s. I'm an only child. I've been just doing whatever I want, going and, whatever I want without, thinking of anyone else for my whole life. So she's definitely very tolerant. But, of course, I would like to share this journey with her.
Absolutely. And have you guys ever sat down and kind of came up with goals together of like, hey, what do we want our life to look like in 10 years, 20 years, 30 years?
No, not specifically. I've tried to get her to sit down, and like tell me her fears, what she's afraid of, so I can try to explain to her how we mitigate those or things like that, or get her to read books and things. But she's kind of just been a wall thus far to doing any of that.
Sure. And you guys have kids?
No, I have a grown kid, but we don't have any kids together.
Okay. Yeah. And when you do try to sit down and talk, or when she watches what you do with, like, say, the Indy property, is there any sort of response that she has to either the positives that come out of that, or maybe some of the struggles that you encounter?
Honestly, I kind of hide the struggles because I don't want to add to her fears and I want to get her on board. So, which is hard for me because, it's stressful and I would like to have someone to talk those things through with. But I would say one of the positives when we did our taxes, because the last like 2 or 3 years we've had to pay like 10 grand, and then this year after getting the 2 properties we got 5 grand back. So to me that alone is like a selling point to me. But that was a positive with her, and the tax lady was like encouraging her to like that the rentals were a good thing for the taxes and stuff.
Okay. So, yeah, I mean, I'll say a couple of things. How long have you guys been married?
September will be 7 years.
Okay. Coming up on the 7-year itch. I would say, number one, I think where I would start if I were the two of you, and this is what me and my wife have had to do, because for us, for a long time, we were not on the same page with real estate and with my real estate goals. It's always kind of been the same thing where I've been sort of the driver, and my wife, who actually is probably watching this live right now, she maybe wasn't always 100% on board, right? And so what we've had to do is we've actually had to hit the reset button, and we've had to sit together and say, okay, what are both of our goals and sort of our mission statement as a married couple, right? Where do we want to actually take this marriage, what we think we can do, what we think God has put us on earth to do together as a married couple, and we can accomplish as a family, right? So that's kind of been the first thing, is just kind of dream. Don't put any actual numbers to it. Just come up with ideas of where you want to go. And then what we've had to do is sort of sit back and look at, okay, well, what are our personal or our individual core values, right? And me and my wife, we could not be more opposite. My wife is more considerate of others. She's more of a social person. She just wants to help people. And I'm more like driven by achievement and success and seeing numbers improve and just personally growing, right? And so because we're naturally different in terms of our core values, it's easy for us to both want different things in a separate way, or we look at each other the wrong way. And so we've had to learn over time to appreciate those parts of ourselves, and the fact that I bring something, she brings something, and we can both reach a goal together. And part of that is through real estate. So real estate isn't everything, but it's part of it. And then the third thing I would say is there's a part of our relationship where, especially when it comes to real estate, I want my wife to enjoy the parts of real estate that I do. Right. So the fact that she gives me the time to hang out with David and work with David and put in 50, 60, 70 hours a week, she gets to enjoy some of those fruits of the labor, right? Where me, her, and David can go on a trip to Cabo and enjoy the time, or we're going to David's short-term rentals and we get to enjoy the time at those short-term rentals. So she's enjoying the fruits of the labor of everything that we're putting into it. But she's also seeing sort of the track record of success that David's had, and then that we've started to achieve as well. So I would maybe just start there and just kind of, maybe just schedule a weekend with each other where you guys get away to Napa or something. And hey, we're just going to dream about the future. What do we want to do as a couple?
Right. Yeah, that sounds good. Which, I mean, yeah, we.
Jeff, let me ask you this.
Yeah.
Your goal, why you want to do this? What drives you to want to build wealth through real estate?
I just want to be able to do the things I enjoy doing. I love traveling. I love I'm an avid mountain biker. I ride dirt bikes. I love traveling around and doing that. And I just see the whole socially, driven, accepted way of my coworkers of working until you're 65 and investing and these 401ks and whatnot. And then just the rate of the cost of everything that's gone up, just, in the last 10 years that I've been paying attention to it, I just don't feel like we can live the life that I want to live, which is traveling and doing these things without having to stress about, paying our bills or
part
whatever,
of real estate to you, this is what I'm asking that question. You see it as freedom from a job you don't like.
Well, actually, I like my job, and I work at county, and I got 7 more years till I retire, and I have no plans to try and quit before that.
So you see then it as a door to a better life that you're not going to get working at county where you're just on set raises every contract or whatever.
Right.
You don't have a whole lot you can do in that environment to improve your position, right?
No, not really. Because at this point in my career, I don't want to go back to school and try and get into management. I have no desire to do any of that. So I'm just kind of on cruise control, trying to retire and be able to.
And so real estate is the only thing that empowers you, right? Yeah. Empowering, it feels good. That is a confident thing, right? We like that, especially as men. We're drawn in general towards like an adventure, a challenge. We're gonna like that, especially if it's an area we feel we'll do good at. In general, if you listen to most like intersexual dynamic instructors that are out there, they'll say that a woman's biggest need is for security. It's how they're wired, right? Their job is to look at everything and say, how is that going to hurt me, kill me, eat me, destroy me, hurt me in some way? So when they see real estate investing, they see a potential tiger that is going to eat them. And you see, wow, what if I had this tiger? Like none of my enemies could ever mess with me, right? Like you're looking at the same thing. You're seeing very
exactly.
So what I think could help for someone that is, she's probably never going to get deep into this like you. You give her information, her eyes are going to gloss over. They're just not going to get all excited about it like we do. You've got to tie the success of the real estate investing into something that makes them feel good, right? If we do this, we can make this much money. We can take this many family trips a year. If we do this, we can put this much money in savings, right? You're going to be like, yeah, we can get money. We can burn it. We can go buy the next deal. She's like, you're just adding risk on risk on risk. You're like, let's take the tiger. Let's make it angry. Let's pump it full of steroids, right? Like, let's leave it around the kids. That's what you don't want to do. So I would look for a way to be like, look, over 30-year period of time, over a 20-year period of time, whatever, this is how much rents go up. When we're 20 years looking back, imagine how stable our retirement's going to be. If we don't do this, inflation's going to make inflation the tiger. It's going to catch us and eat us, and we aren't going to be able to pay our bills. We're not going to be able to give our grandkids birthday money. Like whatever it is that matters to her, you got to show her that we've got 7 years to get as far as we can, and the tiger is going to catch us. This real estate's going to be like getting a grizzly bear that can fight that tiger, right? Like you're going to have to kind of paint this in a way that she understands. You're not just going to like take all the money and bet it on black. Because that's what she's hearing is drain the 401k and let me take it to Vegas, and I've learned the secret to beating the house. That's all she's hearing. Her dad was probably manual labor or a blue collar worker that was just a very conservative person. She probably her whole life, because in Portugal, they didn't have the opportunities like what we have here. It was risky to do this kind of crap in some of these other countries. It just doesn't, they don't understand how in America, if you take action, you're much more likely to be successful than if you're from Honduras, where there is no action to really take. You got to grab a hold and just not make mistakes. So that's my advice is you need to find a guy friend to talk to about your big plans and your dreams and your vision. And like how Kyle and I do this all the time, get that out there. Okay. When you talk to her, don't bounce ideas off her. You're terrifying her. And she's just not going to play that role for you.
Yeah.
You've got to tie real estate towards how it makes your guys more secure.
I like that. Yeah. Yeah. Cause she definitely likes security and
she can't help it. Like she's supposed to, man. That's her job as in the relationship. Is she makes sure that, do you guys have kids?
No.
Okay. So here's something I learned when I was dating a girl. I would like take her daughter to school or something and completely forget that she needed a coat. Okay. And I'm not that dumb. It's not like I don't care. Right. We went outside in the rain and her 5-year-old had to say like, I think I should go get my jacket. I'm like, oh, what's wrong with you? Twice I took her to school and didn't grab her lunch. Literally forgot. Like I had to go home and get her thing and bring it to the school. Like we are terrible at keeping human beings alive as men. Yeah, like we are useless until there is a big scary thing that something needs to be done with. Right? Like then we're better at addressing it, or the big picture stuff. Her job, the way she's wired, is meant to keep humans alive, avoid mistakes, avoid things going wrong. Her mind's always going to be screaming at her, this could go wrong. We could lose everything we work for. She probably loves your very stable job with the county. It makes her feel secure. Okay. Don't make her fight against her nature. It's not going to work. Right? You got to honor the nature that she has, tie real estate to how it can make her more secure. And then the next step is go find yourself some other people that are not your wife to talk to about how you're going to go execute this plan. Because you're probably like getting all excited. You hear a podcast, you read a book, and you want to talk about it. And she's right there. And you start talking. She's just like, you're talking about walking into the tiger cage. Why would you go into the cage with the tiger? I can see how that's probably causing you trouble.
Yeah, for sure. Yeah. That's good. I like that. Tie it into things that she could relate to and feel secure with.
Yeah. And if I was going to do anything, I do this a lot for the people in bigger pockets that are afraid to take action. Because it's not just women. Like guys have our own reasons why we're afraid. They're usually different than women's reasons, but it's all the same thing. I talk about inflation because that's what drives me. Honestly, I don't say this a lot, Jeff. My plan was to have been retired and done like 5 or 6 years ago. I had enough passive income. I had enough rental properties. I didn't need to be a super duper rich guy. I live a pretty frugal life. I was just going to stop working and just be retired at like 33 years old or something like that. And I saw what was coming down the pipe. I saw the tsunami of inflation. And I'm just like, you can't stop. It's going to crash on my head. I need to start paddling. I need to get going. Like, inflation is going to eat up all my savings. It's going to eat up all my opportunities. Like you got to get more real estate. You got to borrow more money. It's stupid that we're doing this to ourselves as a country. I don't think it's good, right? I think Dave Ramsey's advice in general, pay off all your debt, live like your wife, play good defense, would be amazing strategy to win if it was not for inflation. If we had a finite number of money and it was just don't spend money on stupid things, I would be 100% saying the same thing. I'm wired like Dave Ramsey. I'm looking at how much our government prints money, and I'm thinking it's just not responsible to tell people if you just save your money that you're going to get ahead. You can't. Like your county job you're seeing probably felt a lot better of a job when you first got it than what it feels like right now, because inflation and the cost of goods is going up faster than your raises that were negotiated.
Oh, yeah, for sure.
I worked in the law enforcement world. I was employed by the county for a while and then later on by a district, but it was still like 3% raises a year, 2% raises a year, 4%. Inflation, the CPI is at 9%, or it was, right? It's real inflation is probably closer to 30% if you look at how much we've diluted the money supply. Like year over year, 30%, especially when you get into assets. So if you're getting a 3% raise and inflation is at 30%, even if it was only at 9%, you're drowning. That wave is catching you. Real estate investing is not what you do to get wealthy. It's what you do to just not drown. If you're not buying assets, you are falling behind. And that's why I'm on here doing this stuff. It's why I'm putting the retreat together. It's why I'm talking to you guys. It's why every single episode, when everyone else is telling people, don't buy, wait for the crash. Like no one gets mad at you if you say wait for the crash and it never comes. You don't even remember that. I'm putting myself in a risky position to get out here and tell people you need to be buying assets in the best areas because there's a time coming where you won't be able to buy them at all. Hedge funds are going to buy everything. Like short-term rentals are great right now. Dude, it's not going to stay that way. Hedge funds are going to get into this game. They're going to buy a bunch of them. They're going to run them like a hotel. You're going to Google like places to stay in Charlotte. They're going to own all of them, and you're going to go to their website. They're going to put you in one of theirs just like if it was a hotel. So you got to buy it when you can. And that's kind of why I'm out here banging the drum. And I'll sum this up by saying, if you can get your wife listening to YouTube videos or content about inflation, like over the last 50 years, this is what has happened. Like, this is what a house used to cost. This is what a car used to cost. This is what bread used to cost. If we go ahead 20, 30 years in our life, we are not going to be able to like buy groceries with the income that we're making right now. We're going to be working our whole life, or we're going to buy real estate, let it ride the wave of inflation, and it's going to pay for our retirement.
Right.
Take that road. I think that'll help you.
All right. Cool.
All right.
I appreciate it, man.
Thank you, Jeff.
Thanks, Jeff.
All right, guys, we've gone about 2 hours, so I'm going to let you go. It looks like G Fisher ×1 had asked, how do we go to the retreat? If you go to davidgreen24.com/retreat, you can get the information for it and sign up there. If you're watching this video and it's not live, that's okay. You can go to that same URL and there will be information about future retreats. Here's the point of it. I'm wanting to put something together where people can get both the technical information they need, the real world application. Like, I've been learning that as you tell stories, they're much more powerful than if you just give someone information. So if I give you statistics and data, you'll be like, okay, I'll think about it. But if I tell you a story, that will make you actually get involved and take action. So I want to tell stories about how I use the principles I'm teaching at the retreat to literally negotiate the deals, find the properties, and then how they worked out. This is what I did. I paid this much. Why did I target the property? It looked like this. I look for these things. This is what I said to the realtor. This is the offer. This is where they countered. This is why I didn't budge, or this is why I did budge. Then we went in contract. This is the ones I backed out of. These are the ones that I went forward with. Here's what they look like now. Because there is a story there. And if you guys can see what it looks like when we take the information that I talk about here and apply it naturally, actually into an opportunity that I'm finding on market. This isn't like, off market deals. You got to go spend $50,000 to send out letters on. I think you'll be more likely to move forward. And then there's the emotional side too. Like, people are going to be talking about struggles they have, why they have a hard time taking action, where they're getting hung up, and you get to learn from all of their I don't want to say mistakes, but like the things that are holding them back are probably holding you back too. So these are there'll be a really good time. We're gonna have fun. We're gonna learn a whole lot. You're gonna walk away from that like, oh, I can do this, right? Because that's what I need a lot of times. There's things. I remember the first time I went to the gym to go try to work out. You guys wouldn't think so now, because now I'm trying to like keep my weight down. But back then, Kyle, he's smiling, I was like the skinniest, lankiest. I would wear like 3 t-shirts because I looked so skinny. I didn't want anyone.
You were a beanpole. Total
beanpole. So I was just intimidated to go to the gym. I didn't know how to lift the weights. I didn't want to get hurt, and I did get hurt a lot. But I also was just like, there's guys that were there that were stronger than me. And I felt like crap the whole time being like the lanky, scrawny, weak, skinny kid next to the meatheads. And I only got into weightlifting, which was huge for my confidence when I finally put a little bit of size on, because my friend Paul took me to the gym with him and worked out with me and like showed me, this is how you do the bench press. This is how you do the dumbbell bench press. This is how you do a tricep extension. And once I went a couple times with him, it was like, okay, now I got this. My confidence wasn't that bad, and boom, I shot off. So many of you guys are in the position where you're going to come listen to these lives. You're going to listen to the podcast. You're going to listen on YouTube. You're going to read the books, and you're like looking in the windows of the gym at the people working out, and you want to go in there. You want to be a part of it. You have what it takes. There's a pull in your heart to get in there and do it. But you just don't know like how to use the machines. You're intimidated by the other people. You don't want to call an agent and sound stupid. So you just, every time you drive by the gym, you stop by and you look at the other people working out, and you never go inside. And everyone tells you, just go inside, just get over it. It just doesn't help you. You don't do it. These are designed to be like, I'm going to be the role that Paul played where he brought me to the gym. I'm going to show you how to use the machines. We're going to talk about it. You're going to get to see what it looks like to do it. And when you leave there, you're going to be going to the gym all the time. You're going to get addicted. You're going to have that desire to be fit. And you're actually going to have the avenue where you can exercise that, no pun intended. So that's what I'm hoping for. I'm hoping that these retreats become a regular staple. I think, Kyle, how long has it been? Like 3 days that it's been out, and it's halfway full right now, at least with reservations.
Yeah, I mean, they're filling up pretty quickly. So yeah, we're already halfway, almost. I think we have about 12, 13 spots left as of right now. And yeah, it's only been open for a couple days.
It would be almost impossible to not make significantly more money than the cost of the mastermind if you just learn the information and go like buy a property. We'll be taking care of food. We'll be taking care of lodging. You won't have to worry about, there'll be a really good time. We're not going to let any butt heads come to the thing. We're kind of screening out the people that are applying. So these are like friends that you're going to be making. And this can be people from all over the place. Plus, it's just a fun freaking house. You guys are really going to like it there. So right now, you're saying you need a real estate mentor. This is probably something that you should look into. So head to the URL on the screen there and check that out. Kyle, can you tell them a little bit about our mastermind that we sort of have sponsoring these lives? That's what that little lion logo is up there.
Absolutely. So you can find more information on the URL here on the screen, but the mastermind is super cool. So right now we have a Monday night session that we do every single Monday, 6 p.m. Pacific, 9 p.m. Eastern time. It's a live Zoom call. David gets to come on that call quarterly, but what else we do in addition to that is we actually have guests that will come on, people who are in the real estate investing field. We'll have CPAs come in, we'll have attorneys, we'll have just successful entrepreneurs within the real estate space come in, share their story. But it's an opportunity for you to be able to ask them questions directly, learn from them. A lot of times you just connect directly with them outside of it. But in addition to that, we're adding Thursday calls that we do every Thursday at 6 p.m. Pacific. And a lot of times we have David's lending partner, Christian Batchelder, on there talking about what's happening in the lending space right now, the best mortgages that people have access to, that investors have access to right now. And not to mention, it's just a lot of fun, a lot of accountability, a lot of great learning experiences from other people in the mastermind. We've got a cool online community. You get access to, I don't know, couple hundred videos that David and I have done over the last couple years with all of our previous calls, because all the calls we do, they all get recorded. So a lot of really good stuff, a lot of fun. But you can go check out more information at davidgreen24.com/mastermind.
Yep. So the mastermind is like a group that you join, and we do calls every week. And then the retreat is a specific, like, I think it's a 3.5 day event where you're going to be coming and you're going to be learning the information, where I'm going to dive into the deals that I've done and teaching you guys principles of real estate, long distance investing type stuff, short-term rental stuff, portfolio architecture, how to design a portfolio, supply and demand fundamentals, choosing a market, negotiating techniques that we use on the David Green team. Like everything that we do on the David Green team, I developed from buying and selling houses myself. Properties to target, which ones to avoid because you're never going to get them and you're going to pay too much, versus which ones to go after, how to save yourself time, literally setting up a search parameter. So I've got examples of houses that I bought. I bought a house that was listed as 1 bedroom for 3,000 square feet. It's really 4 bedrooms. And we'll talk about why the realtors had to list it as a 1 bedroom and why that missed everybody's search. Or other houses that were sitting on Zillow for 60 days with like 17 views. Gorgeous properties, and they just mismarketed. The initial picture was ugly, or it was priced too high, and when they finally dropped the price, it was stale product and no one was looking at it. Literally how I use the news and what people are hearing in the news, like how it affects them psychologically so much, to ramp up my buying and be more aggressive at certain times or scale back at other times. So this is like high level stuff. This isn't like for, investor 101. Let me show you how to use a calculator to figure out cash flow. This is, you want to be really good at this. You want to operate at a high level. This is why you should come to the retreat. So thank you guys. Please subscribe to the channel. We're going to be trying to do these every Friday for as long as I can keep up with it. Kyle and I will be in Scottsdale. When is that? Like in a week or so, Kyle?
Tuesday. We fly out Tuesday.
Just for Kyle and I and my partner Christian that he talked about are just going out there to kind of work together, get to know each other better, and share ideas. Kyle operates as the chief operating officer of the David Green team, and Christian does for the One Brokerage. So we'll be hanging out in Scottsdale. If any of you guys happen to be in that area, reach out to Kyle, let us know. And thanks for being here. Appreciate this. Please share the channel with other people, and we'll see you guys on the next one.
See ya.